in the third quarter of the year. And by the way, in the third quarter, you could see even actually growth rates for the U.S. that are double digits at the annualized rate for one quarter, because, there's a complete collapse of economic activity for 2 quarters. So once you start from that low base, it's very easy to show a quarter of, say, 12% growth annualized. 12% growth annualized means 3% within the quarter. It's nothing 3%, but annualized looks like 12. So it can happen for a quarter or a second quarter, but my view is that these forces, they're going to bring you, first of all, to a second wave and a third wave of the virus. They're going to lead you to such a massive loss of income and the precautionary savings of the household sector. You can reopen the stores as much as you want, like in Berlin, like in Germany, like in China. People are not going to spend if they don't have income and they're scared. Therefore, by next year, the IMF is expecting that this year global growth goes down 3%, and next year is growing 6%, twice as much as potential. In my view, instead, this year is down 3%. With consensus on that, and next year we'll have barely 3% growth for the global economy. So we're not going to make up for the loss of jobs and income and GDP of this year. The V is a story about this year and next year. The U is a story about next year.
Okay, Nouriel, we're going to come back. Nouriel Roubini with us, of course, with New York University and his various good economic activities as well. With our good news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. The Centers for Disease Control prepared step-by-step advice to guide business owners and local governments as they reopen during the coronavirus pandemic. But as we hear from Bloomberg's Martin DeCaro, the 17-page document was reportedly shelved.
The document by government scientists was supposed to be published last week, but the Associated Press reports the Trump administration shelved it, citing unnamed CDC officials. The move was in line with the president's approach, which is to minimize the federal government's responsibility as states reopen. And even as infection rates increase in some places, Trump is returning to one of his ideas from February.
This virus is going to disappear. It's a question of when.
The first wave of infections is not abating outside the initial hotspots, and according to the COVID Tracking Project, more than 1,000 Americans have died every day since April 6th. In Washington, Martin DeCaro, Bloomberg Radio.
Authorities say firefighters in the Florida Panhandle battled wildfires through the night that forced hundreds of people to evacuate from their homes. A more than 575-acre fire in Walton County prompted about 500 people to flee. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Paul.
Michael Barr, thank you so much. We appreciate that data check and that news update. Looking at on this historic jobs day where another 3 million jobless claims were had, it's just an extraordinary environment for the American worker as jobless claims continue to mount as a result of the shutdown of the economy. Looking at the market, however, we do have green on the screen here today. The S&P up 41 points, the Dow up 306 points. That's 23,818 roughly on the Dow, 1.3%. We'll have more. We'll have Nouriel Roubini coming up. Plus, we'll have more on the jobs data.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our number one priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Influential conversations from...
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes. 16 plus. Conditions apply. Play responsibly.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
Hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are climbing alongside European shares as investors sift through the latest company earnings and data showing another surge in the number of out-of-work Americans. Oil's jumping. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 44 points this morning. Dow futures up 321 and NASDAQ futures up 136. The DAX in Germany's up 1%. 10-year Treasury up 4/30 seconds. Yield 0.68%. Yield on the 2-year 0.17%. NYMEX crude oil is up 10.3%, up $2.48 at $26.46 a barrel. COMEX gold is up 0.6%, or $10.10 at $16.9870 an ounce. The euro 1.0791 against the dollar. British pound 1.2334, and the yen's at 106.48. And that's a Bloomberg Business Flash. Tom and Paul.
Thanks so much. Greatly appreciate it. Paul Sweeney and Tom Keenan, thank you so folks for being with us. Within the jobs report and the better equity markets, I thought we'd digress here, and we can do that with a new digital project of Nouriel Roubini. He has been a pioneer in market economics, folded into his first-rate academic international economics at the New York University, and he's gone all digital on us with the stylish stud photographic image on NourielToday.com. Dr. Roubini, what is NourielToday.com?
Well, twice a week I do a broadcast of about an hour and a half where I discuss what's going on in the global economy, in the markets, and topics like the oil market, what's going to happen to the Eurozone, the future of money and digital currencies, whether we're in a bubble, and assorted topics.
Right.
So it's a format that is much longer, an hour and a half, rather than 5 minutes of
okay, great. So
interview. Yeah.
So basically, you're competing with me. I love it. Nouriel, wonderful.
No,
Nouriel,
I could never compete with you. You're a giant.
Nouriel, let's talk about the zeitgeist, Nouriel. And this, folks, is so important. And trust me, folks, the only time I've ever seen Billions is when my kids called me up and said, oh, my God, I was on it, like in the background on a TV image, and that's all my kids care about. Nouriel, even Billions, the TV show, is talking up Bitcoin this year. And let's be blunt, you are scathing in your criticism of Bitcoin. What does everybody enthused get wrong?
Well, first of all, there was a bubble in Bitcoin and crypto in 2017, but it already has gone bust. I mean, Bitcoin, you reach a peak of 20,000, and even with a rally this year, is a bit, depending on the day, 55 to 60% below its peak. Other top 10 cryptocurrencies are about 80% down from the peak, and 3,000 plus of those, what I call technically shit coins, have lost 99% of their value. So this is a bubble that has already gone bust. Secondly, some people say that the Bitcoin is a good hedge against risk-off episodes. When the markets are down, it's a hedge. It's like hedge funds. Look at what happened in February and March. The stock market in the U.S. went down by 35%. Bitcoin went down by 50%, and the other top 10 cryptocurrency went down by 65%. So when markets are in risk-off, Bitcoin and crypto doesn't go up. It's not a hedge. It goes down more than the market. So it's not even a hedge against a risk-off or spiriting with negative animal spirits. It just doesn't work.
Just because of time, Nouriel, you're going to do this, folks. You can tune into NourielToday.com with Dr. Rubini. I believe it's tomorrow, and he's going to go on for this for 8 hours. Nouriel, in a couple minutes here, you even go after the institutions talking up blockchain. And the line I get is, Bitcoin's suspect, but blockchain's the real deal, and you don't agree with that.
No, blockchain is the most overhyped and least useful technology in human history. And by the way, it's a blockchain in name only, because all these corporate DLT or corporate blockchain is not really blockchain. It's private rather than public. It's permissioned rather than permissionless. It's centralized rather decentralized, and is based on a system of trusted authorities validating it rather than being trustless. So they call it a kind of a blockchain because it's sexy, but there's nothing to do with blockchain. It's just a glorified database that they call blockchain. It's no blockchain. And every experiment in blockchain has failed. There is not a single use case of blockchain that's worked. Banks have spent billions of dollars. They've done use cases. They don't have a single app.
Okay, Nouriel, so you and I are at the Espresso Bar in Davos, and we're hanging out with all the starlets and all that. And Brian Moynihan of Bank of America, or Bill Winters of Standard Chartered, or Mr. Diamond from J.P. Morgan, they wander by, and you're going to tell them their banking blockchain business is suspect?
Well, Moynihan made an interview recently, and he said, we spent tons of money on blockchain experiments. We've done actually tons of patents on blockchain stuff, and we have not seen yet a single application works. He said so. The CEO of MasterCard said so. The CEO of Wells Fargo said so. They all have invested tons of money in blockchain. They tried it because it was a new technology, and the shareholder was saying, why don't we try it? They tried it. And like tons of other technology, it doesn't work, and they're not using it. Just nobody's using it. It's a joke.
What else are you going to talk about with blockchain and Bitcoin? I mean, Nora, this is going to be on fire, folks. This will be out on our podcast. And, the Bitcoin crew is going to go nuts. Are you telling me it's going to zero, or does it have a fair value?
The real value of Bitcoin and cryptocurrency is not zero, it's negative, because they are energy hogs. Since you have 50,000 validators validating every transaction on Bitcoin, the amount of energy used is more than the entire energy used by Switzerland in a year. So it's an environmental disaster. If we're taxing it properly for this negative externality, the price should not be zero, it should be negative, because you have to impose a tax for something that's such an environmental disaster and energy hog. The value is negative, it's not positive.
NourielToday.com, folks. Tune in Friday where Dr. Rubini is going to go mental on Bitcoin, and that was just a whisper of what you will hear as well. Nouriel Rubini at NYU, and again, his new blog, NourielToday.com. Paul Sweeney and Tom Keene. Paul said to me, Tom, he's nuts about Bitcoin. Just do it yourself, and he'll just listen and take notes. I mean, Paul, folks, let me be clear. I don't have a view in this. I joke about it, BitDog and that, but I don't have any axe to grind in this. Paul, this is like the most polarized thing out there.
It really is, Tom. I mean, you hear Professor Riverbini on the one side, then you talk to, a commodity analyst like Mike McGlone from Bloomberg Intelligence talking about as, Bitcoin is a store of value potentially similar to what you might think of as gold. And there's just so many polarizing issues out there, polarizing views, I guess, on Bitcoin. But clearly it trades. It's got a tremendous amount of volatility in the commodity. But it seems to be increasingly accepted in the marketplace.
I mean, Paul, I'm afraid here. I've got the terminal here, folks, and I'm going to my incredible Bloomberg terminal on my iOS. Paul, futures are only up 41. Dow futures up 301.
Yep. In the face of just historic joblessness coming in this country here, Tom, we're going to see numbers that are just going to be more than depression-like.
What we're going to do is get the markets open, folks. We're going to drive forward through the day, and particularly the news from Washington. Don't forget, Kevin Cirilli from Washington this afternoon. This is Bloomberg. Good morning.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is a Bloomberg Money.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes 16+. Conditions apply. Play responsibly.
The trampoline that makes Dad feel like a kid again. The projector that turns film night into outdoor cinema night. The hot tub that transforms your garden into a spa retreat. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
Typical Danny. Imagine trying to unwind at a spa weekend and you wind up getting your mud pack all over your fave personalised dressing gown. But no worries. Just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
This is a message from the government to all essential workers. You're doing vital jobs to keep our country going, and you can now get tested for coronavirus. From health professionals to emergency services, From delivery drivers to grocery workers, from teachers to care workers. Tests are available for you and anyone in your household who has symptoms. For a full list of all essential workers eligible and how to get a test, go to gov.uk/coronavirus.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning, I'm Karen Moscow along with Tom Keene and Paul Sweeney, and the S&P 500 is higher at the open, up 1.3%, up 36 points at 2885. The Dow Jones Industrial Average up 1.1%. It's up 262 points at 23,929. And the NASDAQ is up 1 1/3%. It is up 118 points at 89.73. It erased its loss for the year. The 10-year Treasury up 2/32, the yield 0.69%. The yield on the 2-year 0.17%. NYMEX crude oil is up 9.2% or $2.20 at $26.18 a barrel. COMEX gold up 0.6% or $10.50 at $16.99.10 an ounce. The euro 1.0787 against the dollar. The yen is at 106.50. Tom and Paul.
Very good, Karen. Thank you so much. Greatly appreciate those data checks. Paul Sweeney and Tom Keene. And what we've done, we've jumped around a lot today. Talked about this pandemic. We talked about this horrific labor economy and the shocking numbers out of England this morning, out of Great Britain and the entire United Kingdom. And now, well, we ought to go to the litmus paper of the system with Bannockburn. We do that with Mark Chandler, who looks at the astrology, the stars, the astronomy of this system. Mark, let me go to the great pro indicator, which is to look at the major currencies and take the dollar out. And that is a dynamic of stronger yen and weaker euro. Is that an important measurement now for global Wall Street of the state of foreign exchange?
Yeah, Tom, I think you might have it there, that in some ways, the yen benefits, and actually, the yen has been trending high. I want to say, coming into today, the yen had strengthened 10 out of the past 11 sessions. And I think that really reflects a nervousness in general. And then the euro's got its own problems. I mean, that court decision that basically throws open the idea that national law is more important than EU law. It'd be like a U.S. state trying to overrule a Supreme Court. And this has exposed a greater fragility to the euro. People talk about a banking union or a more complete monetary union. Well, it looks like we need some legal union there.
So interesting, Mark. I mean, it's we think about currencies globally. One of the questions I always have is there a reasonable, in your mind, bear case for the U.S. dollar given where we are in the world today?
That's a good question. Because before the crisis, I thought that this third big dollar rally we are having since the end of Bretton Woods was over or nearly so. But what concerns me now is that the U.S. has gone much bigger in terms of government spending and in terms of what the Federal Reserve has done than anybody else. And I think that this exposes us then to almost a repeat of what happened in 08 and 09, where the dollar strengthened on the back of divergence. So the first in, first out. But if you look at the IMF GDP forecast, the U.S. looks like it's going to be among the least hit this year and among the stronger recoveries among the major economies next year. And with all the stimulus coming in, so it does concern me that we're not seeing the kind of good news or better news or stronger reaction from the Eurozone, from Europe. Yeah. And I think this keeps the dollar well supported.
Mark, there's a whole history around depression and whether the contraction is, a decade or even 12 years long like we had in the Great Depression, or maybe this time it's a little shorter around as well. What do capital flows do in an economic contraction? I mean, it's about interest rate dynamics, folks, but it's also about money moving around. How does the money move when you get the shocking numbers we're seeing right now?
Yeah, I mean, it's a good question. I think that what strikes me is not only is the U.S. A more aggressive response, but look at the return on U.S. assets. I think Karen Moskowitz was just talking about how the NASDAQ has turned positive for the year. And even if you look at the S&P 500, down a little bit less than 12%, many of the major European bourses are down twice as much. And so not only do we have a positive yield in the U.S., our stock market's performing better, and I think people, that is to say investors, anticipate better return on their investment in the U.S. than in Europe or Japan. And so I think that on balance, this is going to encourage Americans to keep their money at home and for foreign investors to buy U.S. assets.
Well, there's plenty of assets for sale. So, Mark, when you think about kind of the currencies here, what do you think about the sterling right here? I mean, it's Brexit's been, obviously with the pandemic, has been put to the back burner here, but it is still moving forward here. How do we think about pound sterling?
Yeah, so for me, I'd say that what I find notable is that while there's good reason to be selling the euro on the back of that court case, sterling is really underperforming it. And I know, here in the U.S., we're talking about what kind of recovery we should have, whether it's going to look like an L-shaped or U-shaped or a V-shaped. Well, today, the Bank of England seemed to put their stake on a V-shaped recovery. They're looking at the economy, the UK economy, to Tom's point, it looks like it's going to contract about 14% this year, the Bank of England says. But next year, it's going to bounce back by 15%. So my best guess right now is that sterling is treated more like a risk asset. Brexit negotiations between the UK and the EU trade negotiations are very difficult, and I don't see how they're going to be able to succeed, which means that the UK will be unprepared when they leave formally at the beginning of next year. And I think that for trading purposes, I'd say that sterling was once again turned back by the 200-day moving average that comes in around 126.5.
Yeah. What's your trade right now? I mean, Mark, we talk about all this econobabble, but actually once in a while somebody wants to speculate and actually try to make money in this game. What's the Chandler opportunity right now?
Yeah, I don't know. I mean, I think it's very difficult, partly that we saw this big jump in volatility in March, and volatility has come off. I guess that one trade that I've been looking at is still trying to look at pick a top for the Australian dollar.
I knew you were going there. I knew, folks. I knew Chandler was going to AUD. Go.
Yeah, sorry to be so predictable, huh? But the Aussie was really smashed in March, came roaring back in April, and we're sort of trying to carve out a top, at least consolidate. And so I kind of thought for risk reward, if you're with me and you think that the stock market did the same thing, big sell-off in March, roaring back in April, and now we're sort of struggling, and maybe the Aussie is a way to play that renewed risk off.
We're going to do a value add here, folks. And we're going to do this off Kit Jukes of SocGen, who Mark knows is wonderful. Kit wrote 2 pages on AUD this morning. And as you know, Mark Chandler, AUD with their unique commodity and their geography and that, it's not just Aussie against U.S. dollar. It can be Aussie yen, sterling, Aussie, ba-ba-da. Which pair of Aussie is the opportunity in?
Yeah, I really, maybe I'm kind of like based in New York, I'm kind of U.S. centric. But I could see a case to be made if you're going to sell the Aussie, you want to pick a stronger currency against it. And I'd say that sort of rules out a lot of the European currencies.
Fair.
So I see a lot of people do a strategy is find 2 highly correlated currencies and pick the faster of the 2 horses. So maybe it's Aussie Canada, that kind of play. But maybe it's the Aussie yen as another way to express that risk. If we're right, to be clear, come back.
To be clear, you're going strong Australia, weaker Canada.
The other way. I kind of think that Aussie,
I screwed it up, folks.
No, maybe I might have been my way of expressing it, but I do think that if you think that the world has moved too far to taking too much risk off, that's going to now perceive new risk as countries try to open up and some stumbling. That you want to be short the stock market in general. And so how do you express it in the foreign exchange market? I think it's to short the Aussie and buy the yen.
You're going to go to Japan now. See how he does that, Paul? Yep. I mean, the only case I have in this, he mentioned a case earlier. Paul, the only case I have is a case of Foster's beer. Continue.
Exactly. So, Mark, it's interesting. Let's go south of the border a little bit. Mexican peso. It's the concerns there about the economy there, concerns about how the pandemic will impact Latin America. How are you looking at the peso?
Yeah, I'm worried about Mexico. I think that they have 3 main sources of capital coming into the country. exports, that's primarily oil, and there, of course, oil's collapsed. Another source of revenue is tourism. That's collapsed. And the other source is worker remittances. People working in the U.S. sending money back home to families in Mexico. And many of us expected those worker remittances to have dried up as well. But last month there was a big surge, a record level, partly as a function of peso's weakness.
Yeah.
And so those dollars made in the U.S. can buy a lot more, and so it's much better to send that savings home.
Okay.
But I'm worried about Mexico, a downgrade. I think I worry about Pemex. I worry that the country is a bit slow to respond. That is, AMLO thinks that fiscal bailouts is another way to support big business, and he's hesitant to do this. So Mexico is supposed to be among the hardest hit from the crisis. Remember, they didn't grow any quarter last year, and the policy response is less than most countries.
Okay, we got to leave it there. Mark Chandler, great update. Folks, if you are confused about Australian dollar, contact Mr. Chandler at Bannockburn because my head's spinning. Mark Chandler there on foreign exchange. Always my head's spinning because it's the news in New York City. Here's Michael Barr.
Tom, Paul, thank you very much. The coronavirus has killed more than 260,000 people worldwide, including more than 70,000 in the U.S. Connecticut Governor Ned Lamont says his state is eyeing a May 20th date to start to reopen the state. Lamont says they plan to take it slow.
I've told people that we have strict protocols, and I'm going to hold you accountable for honoring those protocols. And people know that if there's a flare-up, we can throttle back a little bit, so we do this in a balanced way.
Lamont says the plan depends on certain benchmarks being met, such as a steady decline in hospitalizations in Connecticut. Colleges and universities must have adequate supplies of tests, face masks, and personal protective equipment. While many children across the country are home for the rest of the year, a handful of small schools in Montana will be back at it today. The 74 students and staff at Willow Creek School in Three Forks are among those being allowed to return. Bonnie Lower, Willow Creek School principal and superintendent, told ABC they talked to public health officials.
We went through all the guidelines and we checked out our classrooms, measured them out, made sure we would fit, and that we had the things that we needed to open and do it safely.
Lower says they surveyed the parents and found that more than 3/4 of their students would come back to school. A top donor to President Trump and the Republican National Committee will be named the new head of the Postal Service. Louis DeJoy, a North Carolina businessman, will serve as the new Postmaster General, according to the Washington Post. It puts a top ally of the president in charge of an agency President Trump has long pressed for major business changes. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom?
Michael Barr, thanks so much. And, to Three Forks, Montana, we say good morning to all dining at the Iron Horse Cafe and Pie Shop as well. Paul, I don't know the story, but that's just great news. Somebody somewhere is going back to school to finish the year strong.
Yeah, exactly, because we've seen so many, just in the state of New Jersey here, Tom, Governor Murphy, closing schools for the remainder of the academic year following what's happening in New York. So it's nice to see somewhere in the country the kids being able to go back.
Yeah. How's that distance learning going at the Sweeney House?
Well, it's going fine because it's just we have a high schooler that's distance learning, and he's kind of just powering through it. So I feel for the parents that have young elementary school children who really have to actually teach something at home.
It is just wearing. I'm playing Bed Wars, trying to bond with Afterthought, and it's not working. I'm trying to get up to Insomniac, but my level's only Sleepy.
Right, exactly.
This just ain't working. Folks, we have a market that's up. We've got a lot more. We'll do some data checks here forward for you here again with yields higher. And the NASDAQ, as Karen Moscow mentioned, elevated back to where it was. Stay with us. This is Bloomberg. Good morning.
This is a Bloomberg Pursuits look at luxury. The future of 11 Madison Park in New York, named the #1 restaurant in the world in 2017, is uncertain, says chef owner Daniel Hum. It will take millions of dollars to reopen. Currently, it's a commissary kitchen producing almost 3,000 meals a day to feed hungry people around the city. In the future, we're going to have to redefine what luxury means, says Hum. I don't only need to feed the 1% anymore. On the topic of outsized wealth, Elon Musk has cleared the last hurdle to collect his $706 million moonshot pay award from Tesla, and at the same time, vowed to sell most of his possessions. First up, 2 Bel Air mansions listed for a combined $39.5 million. Maybe with that extra cash, he can spring for an HBO Max subscription launching May 27th. Without discounts, AT&T's new service costs $15 a month. That's at the high end of what his streaming rivals Netflix and Disney Plus charge. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Global news 24 hours a day.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Helen is dreaming of fighting a flock of 40-foot flamingos. But in reality, she's helping fight COVID-19 in her sleep. Like thousands of others, she's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments. I'll fight you. Keep fighting, Helen. Search Vodafone Dream Lab and join the Dream Team tonight.
Dream Lab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and the NASDAQ Composite Index erasing its loss for the year with a 30% rally since late March, demonstrating the appeal of technology shares in the work-from-home age, even as the economy's path remains perilous. The S&P 500 and Dow Jones Industrial Average, which track broader swaths of the economy, both remain lower for the year, with the S&P 500 still down by at least 10.5%, and the Dow Jones Industrial Average down by about 16%. But they are all higher today. The S&P 500 up 1.4% this morning, up 39 points at 2887. The Dow Jones Industrial Average up 1.3% or 312 points at 23,979. And the NASDAQ is up 1 1/3% or 118 points at 8972. 10-year Treasury up 3/32, yield 0.69%. The yield on the 2-year 0.17%. NYMEX crude oil is up 8.5%, up $2.03 at $26.01 a barrel. COMEX gold is up 0.6% or $10.30 at $16.9860 an ounce. The euro 1.0782 against the dollar. The yen is at 106.59. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Paul Sweeney and Tom Keene. And with so much going on, we thought we'd get back to just the basics, which is, what did I miss? Thank you, Joe Weisenthal, for that comment. What did I miss was a NASDAQ rally. To give us perspective, Gina Martin-Adams running all of our equity coverage at Bloomberg. Gina, Karen Moscow just did the statistics there on the composite. How loved is the NASDAQ composite, or has it been the most unloved rally since time began?
Yeah, it's a great question. I think it's a comment. It depends on who you ask, really, because if you look at the absolute data, it looks like tech is extraordinarily loved, and that's definitely been promoting the NASDAQ. On top of that, you've got a lot of biotech and healthcare companies that are in the NASDAQ, and obviously with the unique situation that we face globally in terms of the healthcare crisis, the healthcare companies are also performing very, very well. However, investors' general distaste for equities at large is also really is also very evident, and it's evident in the fact that as much as stocks are performing extremely well, valuations for equities are still very suppressed relative to valuations for bond markets, and that's even relevant in the NASDAQ.
So, Gina, we had that peak to trough 34% or so decline in the market in March as the market discounted kind of the pandemic and the economic impact resulting from it. But we've retraced roughly half of that. Does that seem a reasonable performance for you, or do you think the market's a little bit ahead of itself, given some of the economic data that we're seeing and we're certain to see over the months ahead?
Yeah, so the market can get ahead of itself in short term in fits and starts, and we do think over April we might have gotten a little bit ahead of ourselves in pricing shorter term recovery. That said, if you take a 12-month view and you think, where are stocks headed over the next 12 months, we still see plenty of upside in our fair value model. We just updated this on the terminal for today, but what really changed in March was policy. It wasn't necessarily that we suddenly started pricing much better economic conditions emerging. It was the fact that the Fed threw absolutely everything that they had at the crisis over the course of the month ending mid-April, committing to doubling the balance sheet over the course of this year, and that naturally elevates valuations.
I get that, and I get how that folds into the bond market. How does the Powell put elevate Walt Disney shares?
Well, it elevates all equity markets. It's a rising tide lifts all boats. It's not necessarily one company over another, but what it does is it elevates the multiple you're willing to pay for future earnings growth because your discount rate is lowered. And so naturally, when you have bond prices at the lowest, at or near the lowest levels we've ever seen in time, it elevates the value with which you're going to pay for all asset classes.
So what's the normal PE multiple? Can you do it to 3 decimal points?
Yeah, I know. Believe it or not, our models suggest that your PE multiple that you should be willing to pay for stocks right now is 22 times trailing earnings.
Paul, get her off the air.
Out of control. Yeah. I know. You can laugh me off the phone all you want, but the reality is when you've got the bond market where it is and you've got spreads tightening, the Fed committing to purchase all these assets, the reality is that you ultimately get a follow through into equities, and so you have an enormous amount that you have to be willing to pay for exposure to assets.
I mean, Paul, I don't want to get Ms. Martin Adams in trouble, but I think she just stated that U.S. too big to fail banks should be trading at 3 times book.
3 times book. Gina, I mean, is there any takeaway here? We're pretty much through the earnings season here. Got a little bit more to go. The retailers certainly, a lot of companies pulling guidance.
Yeah.
Is there any takeaways for the average investor here?
Yeah, so it has been a really tough earnings season. We've had 100 companies pull guidance, which is a record, at least as far as our record keeping goes. You also have had companies really predominantly focused on liquidity and cash preservation strategies because of the uniqueness of this crisis. The one light that we're seeing at the end of the tunnel are companies with exposure to China. So when we look through and we're looking for, what is a recovery likely to look like over the course of the next year, the companies with exposure to China are the only companies that can give us some sense of what a post-COVID world looks like. It's the only country that really has started to reopen en masse. And surprisingly, or maybe not surprisingly for some, companies have actually been pretty optimistic. You've had Starbucks, McDonald's both talking about demand growth in China recovering at a relatively rapid pace. Monsanto also suggested that, their China stats are somewhat optimistic. So I do think that there is at least some light at the end of this COVID tunnel if China is representative of what's to come. But in the near term, it's really just about liquidity and cash preservation in the S&P 500.
Gina Martin Adams, thank you so much for attending today. Don't come back until the PE workout is at 25. She runs all of our equity coverage for Bloomberg. intelligence just has been absolutely superb. I can't say enough, Paul, about Gina's real-world track record of being in the market when it's the gloomiest.
Yeah, it's been great to have Gene as part of Bloomberg Intelligence. He just brings a wealth of knowledge about and historic knowledge about how equity markets perform and among cycles and different scenarios. And so really able to give, I think, Bloomberg customers a real sense of kind of where we are in the markets.
Paul, it's going to be extraordinary tomorrow. I really don't know what to make of it, folks. We've had some real historic moments on Bloomberg surveillance and before that Bloomberg on the economy. And Paul, what do you make about a lowball 15% that Neil Kashkari, the Minneapolis Fed, in comments a bit ago, modeled out near 24%?
Those are 1930s numbers, Tom, and you get up to with the two handle on the front here. And I think the real question for investors, for the markets, are we know this 2Q is going to be brutal in terms of unemployment, in terms of GDP, but talk to me about Qs 3, 4, and then into 2021. That's kind of where I think the market's trying to get to right now.
Well, we will see. It has been an extraordinary day. We really need to say thank you to our team that has just done a great job here of getting us through the day. Really been just absolutely superb. We leave you with the markets up substantially. Lisa and Paul will drive the conversation forward. We are produced in New York.
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the USwitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
This is a message from the government to all essential workers. You're doing vital jobs to keep our country going, and you can now get tested for coronavirus. From health professionals to emergency services, from delivery drivers to grocery workers, from teachers to care workers. Tests are available for you and anyone in your household who has symptoms. For a full list of all essential workers eligible and how to get a test, go to gov.uk/coronavirus.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
TSB believe in people helping people. So if for whatever reason you become an innocent victim of fraud, they will refund every penny you lost from your TSB account. Find out more about their fraud refund guarantee at tsb.co.uk. Terms and conditions apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
At the Halifax, we're all working together to be there for you.
Your money is safe in your account. However, people are using the coronavirus outbreak as an opportunity to try out new scams.
Rest assured that we will never call, text or email you asking you to move money to another account.
Neither will we ask you to share your login details.
For For more information and for tips on how you can protect yourself against fraudsters, visit halifax.co.uk/security.
So however you need us, at the Halifax, we're here to help.
Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good morning. Happy Thursday. Coming up, we'll dig into the depression-like devastation to the global jobs market. The dissonance continuing, with stocks rallying against the backdrop of horrific economic data. We'll look at the implications for markets from public to private. Right now, though, let's head over to Greg Jarrett for a Bloomberg Business Flash. Greg.
Thanks. We're sponsored by New Jersey Institute of Technology, ranked the top 2 percentile nationally for alumni mid-career earnings. Number 1 for student upward economic mobility. Learn more at njit.edu. Stocks are climbing along with equities in Europe as investors sift through the latest company earnings and data indicating another surge in the number of out-of-work Americans. Oil is up. We look at the numbers every 15 minutes throughout the trading day. S&P 500 is up 1.5%, up 42. Dow's up 1.4%, up 332, and the Nasdaq's up 1.4%, up 124. The 10-year is up 4/32 with a yield of 0.69%. West Texas Intermediate crude's up 8% at $25.89 a barrel. COMEX gold's up 0.9% at $17.0440 an ounce. The dollar yen 106.63. The euro's $7.75, and the British pound $1.2285. Number of Americans filing for unemployment benefits top 3 million for a 7th straight week, signaling little relief in sight. Since the coronavirus began closing restaurants, factories, and offices from coast to coast back in mid-March. Initial jobless claims total 3.17 million in the week ended May 2nd. That's a Bloomberg Business Flash. Bloomberg Markets is on with Lisa Abramowitz and Paul Sweeney.
Greg Jarrett, thank you so much. We appreciate that update. Yes, historic numbers on the unemployment front here. Another 3.2 million jobless claims filed in the latest week, bringing the total to over 33 million since mid-March. Just extraordinary. We'll get some more color on that unemployment data tomorrow with the jobs number. Right now, let's get a sense of what's going on in the equity markets, as Greg was just reporting. Green on the screen. Let's go to Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at here in the equity markets this morning?
I'll tell you, what kind of jumps out is that you're seeing some real positive response from stocks on quarterly results. I mean, it's one of those days where you look across the S&P 500, you see a bunch of stocks up more than 10%. One of them that really jumps out is PayPal. I mean, you talk about a company that's sort of made for these times, moving money around online without having to bother with cash, which, of course, can carry the coronavirus, or deal with punching buttons at a teller machine or whatever. I mean, and so PayPal really getting a break in a sense. I mean, first quarter results did not measure up to what analysts were looking for, at least the ones we surveyed here at Bloomberg, and yet they talked about how business is sort of rebounding after revenue kind of fell off in March. I mean, given that people weren't taking Uber rides, they weren't, going anywhere to speak of, and so the company suffered because of that. So you got PayPal up about 12% at the moment, and you're talking about a company that started out the day at $150 billion in market value. So it's not like, it's some, little tiny company. It's definitely kind of setting a pace here.
Dave, this is a fascinating story, and it highlights a growing trend, a disparity between the haves and the have-nots, the businesses that really have a focus of the online world, as well as those who are really based on the old economy. This morning, the NASDAQ composite erasing all 2020 losses on the heels of some of these tech earnings. Can you give us a sense of whether we're really seeing money diverted to these tech companies from other businesses, or whether they just haven't suffered as much as the others?
Arguably more the latter. I mean, we certainly saw that in the results out of the likes of Facebook and Alphabet, the owner of Google. And, you're talking there about a couple of companies that are largely dependent on advertising, and we've certainly seen, other companies in that area take hits, notably Pinterest this week. So, you put it all together, and it looks like the haves are still getting, and that's enough to kind of keep things going here. And you see that in the performance of the NASDAQ. And bear in mind, if you focus in on the NASDAQ 100 index, the biggest companies in that market, it's up 4% for the year. So the composite's being kind of dragged along, arguably, by the performance of the NASDAQ's biggest companies, the likes of Facebook and Alphabet and Amazon.com and Microsoft and all the rest.
Well, Dave, I got another one for you. Peloton hitting an all-time high today, releasing some pretty strong numbers. And the question, I guess, for a lot of investors, is this just a COVID-19 story, or is there maybe more legs to the Peloton story?
Well, that really is the question. Because, these exercise bikes will cost you a couple $1,000s, and yet, they're seeing revenue jump up like 66% in their latest quarter, and the number of subscribers to their online classes that you can take while you're riding the bikes up 64%. So, it's certainly a made-for-home kind of company. Of course, with people staying at home, the effects of the coronavirus are working in their favor and against the likes of Gold's Gym, which had to file for bankruptcy. So, it's sort of a shift in how people exercise. Now, whether that keeps going is another question. But for the moment, you're talking about Peloton being up 10.5% at the moment.
Meanwhile, I do think we need to comment about the bond market, especially as the U.S. sells unprecedented amounts of debt, particularly in the longer end of the yield curve, basically rolling out their inaugural 20-year issuance, announcing this yesterday, a $20 billion batch, the first time they've sold this maturity since the 1980s. I'm looking today, yields are actually a little bit lower on the longer end after steepening yesterday. I'm just struggling to understand the disconnect here between the optimism that we're seeing in stocks and the persistent pessimism, or at least pessimistic message coming from the bond market with yields so low, inflation expectations more abound, even as governments around the world print money. I'm wondering how much this has become a focus for some investors, Dave.
Well, it does get a little tricky, especially when you consider financial stocks are among the top performers of the day in the S&P 500, along with energy shares with the rising oil prices. So, yeah, you do have that kind of disconnect to be concerned about. And it's a matter of, how does the economy sort of emerge from here? Because we know the second quarter is going to be just terrible. It's not only showing up in the jobless claims figures, but elsewhere, too. So, it's clear that people are anticipating, a rather substantial recovery. By next year, you're back to earnings growth for the S&P 500 if you look at the analysts that we survey. So, it's the best of all possible worlds being, to some extent, factored into share prices here.
Yeah, and with all that stimulus money comes inspiration and fodder for a dad joke, which we got online from one of our listeners yesterday. I enjoyed this one. If you use your stimulus money to buy baby chickens, you get money for nothing and chicks for free.
That's a good one.
I love it. It's great. I will also say...
I wonder if Mark Knopfler of Dire Straits has heard that one yet.
It's your latest. Axl Rose weighing in, having a Twitter spat with Stephen Mnuchin of the Treasury Department, so perhaps we'll get an Axl Rose version of monetary stimulus. In the meantime, I'll bring you this, especially as Apple shares climb close to record highs and as the big tech names drive the gains. If you see a robbery at an Apple store, does that make you an eyewitness? Oh, come on. I like that one.
That's a good one.
That was good.
That is good, actually.
All right.
You have to think about it for a second. It's like, oh, okay.
Yeah, a lot of them you do, and especially the ones that are sort of...
not all of them. Some of them, you just... And those are the ones that are not so good. The ones you have to think about for a second are really worthier in my...
Those are fun.
You think so?
Whatever.
I go for the base humor that would appeal to my 8-year-old and 11-year-old. Dave Wilson, Bloomberg Stocks Editor, thank you so much for joining us, as always. And it really is something that we will continue to talk about, how you cannot even put these jobless numbers in any kind of historical perspective whatsoever. Neil Kashkari coming out and saying it's a long road ahead. It is not going to be easy to climb back from these job losses.
No, I think you're right here. I mean, just to put it in context, all the jobs created since the financial crisis over the last 10, 11 years have been lost here just in the last 7 weeks. So just extraordinary. Right now, let's head down to Washington, D.C. Let's get some world and national headlines from Nathan Hager. Nathan, what do you have for us?
Well, Paul, we'll begin with this red headline that just crossed the Bloomberg terminal. Breaking news from the Supreme Court. It has thrown out the convictions of two allies of former New Jersey Governor Chris Christie for their roles in the George Washington Bridge lane closing scandal, so-called Bridgegate. This is a unanimous decision. Justices found Bridget Ann Kelly and Bill Baroni did not commit criminal fraud under federal law, even if they lied about the reason for closing two access lanes in that 2013 scandal. Those closures created crippling traffic jams in Fort Lee, New Jersey, to punish that city's Democratic mayor for not endorsing Christie's re-election bid that year. The Trump administration has reportedly shelved a set of step-by-step guidelines for local leaders to follow on reopening their states during the pandemic. The Associated Press reports the 17-page document from the Centers for Disease Control was supposed to be published last Friday, but a CDC official says scientists were told the guidance, quote, would never see the light of day. Former CDC Director Tom Frieden says the pandemic is not over.
There will be, tragically, at least 100,000 deaths from COVID by the end of this month. As bad as this has been, it's just the beginning.
The Trump administration has been closely controlling the CDC's release of information. A group of Senate Republicans is urging the president to suspend all new guest worker visas for 60 days due to what they say is an extreme lack of available jobs for American job seekers. Senate Finance Chairman Chuck Grassley made the request in a letter to the president, along with Senators Tom Cotton, Ted Cruz, and Josh Hawley. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Why can't you just go to some remote island and wait till all this is over?
The range of outcomes is so wide.
Because it's your job.
What do you think some of the structural changes might result?
Fortunately, it's our job too.
How's the value done in this market?
Paul Sweeney and Lisa Abramowitz.
It's very hard to make a forecast.
Bloomberg Markets.
This could be a lower for longer type of hit.
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Tom has been a teacher for over 40 years. One day, I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. I was really starting to worry.
Levi and I talked about how it would change our lives, but he was there beside me.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Economics.
Are we still ultra-accommodative?
Finance.
Do you see this as a technical correction?
Investment.
The markets move seismically.
The Bloomberg Surveillance Podcast.
Mistakes are made when you sell something because you need to sell it.
Tom Keene, Jonathan Perrow, and the names that shape the world's markets.
We speak with Professor Schiller of Yale University.
David Solomon, the Goldman Sachs CEO, joins me.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
In-depth analysis.
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/. go/business-support now.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the Uswitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
TSB believe in people helping people. So if for whatever reason you become an innocent victim of fraud, they will refund every penny you lost from your TSB account. Find out more about their fraud refund guarantee at tsb.co.uk. Terms and conditions apply.
Sports and festivals on hold. Weddings and christenings on hold. Marathons on hold. But not everything is on hold.
My name's Lynn, and I have terminal cancer. I don't know how many weeks I have left.
In this time of national emergency, Marie Curie nurses and hospices are needed more than ever. We can only care for dying people like Lynn if you donate. Visit mariecurie.org.uk to donate to our emergency appeal.
At Tesco, we've price-matched Aldi on hundreds of products, like bananas, peppers, chicken breasts, mushrooms, Warburton's bread, strawberries, even avocados. That's Tesco products at Aldi prices. Because now more than ever, every little helps. Tesco. Prices checked on comparable products from GBLD stores and online twice weekly. Price most often found matched excluding promotions. Selected Tesco stores excluding Express and all Northern Ireland stores. Products and their availability vary weekly and by store. Details at tesco.com/Aldi price match.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
All three of the main U.S. equity benchmarks are higher after a mixed session yesterday. News that top U.S. and Chinese negotiators will speak as soon as next week on trade did help boost sentiment. The number of new claimants for unemployment benefits surged by about 3.2 million, though a bad number was expected by investors, and the market seems to be taking it pretty much in stride. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is up 1.1%, up 32. Off earlier highs, the Dow is still up 1.1%, up 257. And the NASDAQ is up over 1%, up 91. The 10-year is up 5/30 seconds with a yield of 0.68%. West Texas Intermediate crude oil is up 7.1% at $25.70 a barrel, with COMEX gold up 0.8% at $17.0180 an ounce. The dollar yen at 106.59. The euro at $7.72. The British pound at $22.77. What is up with oil? Saudi Arabia moved to prop up the recovery in energy markets by raising crude prices for its customers worldwide, triggering the current rally in oil futures. State-owned Saudi Aramco increased pricing for most of its grades for shipment in June. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
You know, we talk about the economic impacts, resonating from the global pandemic. We talk about some of the big public companies that have been certainly reporting over this past earnings season. But you think about it, it's really the small and mid-sized businesses that are really being impacted directly, and they have less of a cushion. To get a sense of how the small and mid-sized market, the middle market, if you will, is performing, we're really fortunate to speak with Randy Schwimmer. He's a founder and head of origination and capital markets at Churchill Asset Management, which is an affiliate of Nuveen. He's also the publisher of The Lead Left. So we're really happy to have Randy with us. So Randy, give us a sense here. I know you guys spend a lot of time working with kind of middle market types of companies, and I'd love to get a sense of kind of we're 6, 7, 8 weeks into this pandemic, the economic impact, the job loss, the loss of demand. What are you seeing in your portfolio of companies?
Yeah, I'm Paul and Lisa. Thanks for having me back. It's been a wild 60 days. You're absolutely right, and would love to roll the clock back, but look, all we can do is move forward. What we're seeing generally is that I think that the portfolio companies, and there's no better way actually of judging the impact on these companies than looking at not only our portfolio companies, but those across the middle market and direct lenders who service those businesses. And you can kind of divide them into three groups. The first group is sort of the frontline businesses. Those are the travel and retail, leisure, restaurants, and so forth that have been most directly hit. And those, as we've seen, are pretty much shut for business in many cases. You can just walk through your neighborhoods and see that. Certainly the restaurants are, deliver only or pick up only, and so their business is way down. The next would be the services businesses that supply those frontline businesses, and they're impacted perhaps less so. And then we have businesses that seem to be, fairly intact. They tend to be in the service sector areas that we focus on, more defensive businesses in IT, for example, keeping the back offices going while we're all working at home. And those businesses seem to be doing pretty well, and that's pretty much the kinds of companies that we've been financing over the last 10, 12 years. So, but in general, it's pretty significant, and you've seen that reflected in the unemployment numbers that just came out.
Randy, we've had a lot of conversations about the dry powder that's been raised or some of the funds that have been raised over the past few years to invest in small and mid-sized companies. We've talked also about some excessive risk-taking, but I'm wondering at this point, what would it take for private debt managers to unleash that dry capital into a market that's desperate for it, especially as we see that about 52% of U.S. small businesses surveyed by the Human Resource Management Society think that they're going to be out of business in 6 months if the shutdowns continue.
Right. So you've identified clearly the need. And now the question for those of us who are on the front line of financing is what can we expect in terms of the next 3 to 6 months in terms of performance of those businesses. Now, there's some of those, for example, that we know, like restaurants and fitness centers that have been completely shut down. It seems like we are starting nationwide to see signs of those kinds of businesses, state by state, opening up with definite limitations. And so it's not all opening up at once, and you're not seeing all the customers flooding back. There's going to be social distancing. It's going to be a slow open rather than a quick one. And so what finance folks like ourselves are looking at is try to get some conviction around where revenues are going to be. Because if you're going to extend credit to these businesses, you want to have a fair sense of when they are going to be opened up, when they're going to start generating revenues, when they're going to generate cash flows, and what level are we going to be seeing. For example, the restaurant business. Is that going to be back up to where it was? We don't think so. That's not a business sector that we finance. But I think for those who do, are we going to see 30% of what we had in January? Is it 50%? Is it 20%? So those numbers are very hard to tell. The other thing that's going on is even sectors like healthcare, which, we do a lot of. Some of the physician-focused practices, and you probably have seen this in your daily lives, you can't just walk into your doctor's office for an appointment. There's telemedicine. You can do a lot by phone. So what's the impact of those businesses? They're clearly going to be coming back, just as gyms are going to be coming back, some restaurants. But to answer your question, there are going to be some businesses that it's going to be very hard to get conviction over how they're going to be doing. But once that starts to happen, and once we start to see America going back to work, and we get a sense that these companies are coming back, then you can model performance on those companies and actually figure out whether or not they're going to pay your loans back.
Too short. Randy Schwimmer, thank you so much for being with us. We'll have to have you back to discuss this as time goes on and we get a clearer sense of some of those future revenue flows as you were talking about. Randy Schwimmer, founder and head of origination and capital markets at Churchill Asset Management, an affiliate of Nuveen, also publisher of The Lead Left. If you don't receive it, you should. It is a great compilation of all things having to do with the middle market lending space, the absolute authority when it comes to that. Coming up, we're going to hear from one of those businesses that's in the restaurant area. That is Papa John's CEO. I'm very excited to hear what he has to say about the landscape. Meanwhile, in the markets, we're seeing that bifurcation of new and old businesses, big tech reaching at this point, erasing losses, for the year with the NASDAQ firmly in green territory. I'm Lisa Abramowitz, along with my co-host and colleague Paul Sweeney, and this is Bloomberg Markets.
This is a Bloomberg Money Minute. Stocks shrugging off tough economic data. The Dow up more than 280 points. Millions more Americans filed for unemployment benefits last week, bringing the total to about 33.5 million since mid-March. Initial jobless claims totaled 3.17 million last week. Top Chinese and U.S. trade negotiators will speak as soon as next week on progress in implementing the Phase 1 deal. President Trump threatened to terminate the agreement if Beijing wasn't adhering to the terms. The world's largest beer maker is warning the second quarter will be much worse than the first. Anheuser-Busch InBev said April shipments fell 32%. That's with bars and restaurants being closed. And Peloton is cashing in on the nationwide shutdown. The maker of fitness equipment said quarterly revenue soared 66%. Peloton also raised its forecasts. The outbreak has led thousands of Americans to buy the company's stationary bike and work out at home. Courtney Donahoe, Bloomberg Radio.
The average time a resume spends on an HR manager's desk is 7 seconds, and most of them are tossed aside. Now imagine if one of those resumes belonged to Yasmin, who was
living in a shelter, juggling 3 jobs. I had to be resilient. That's something that you can't teach.
We rely so much on a resume, yet it could never tell the full story of someone who
had to be independent and take initiative. And that's how I handle every project I get.
Discover new ways to develop great talent at gradsoflife.org. Brought to you by Grads of Life and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers. The markets.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Get your cook on with Asda. With Butcher Selection quarter pounder beef burgers, get a 4-pack for just £2.28. And salmon fillets, get a 2-pack for only £2.97. So dinner's always a winner. At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores online, subject to availability.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
Please be wary of people you've met online who claim to be stranded abroad and urgently need money. Always take time to think before you act, and if you think you're the victim of fraud, then let your bank know right away.
For more advice on keeping your money safe, visit santander.co.uk.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone. and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Max is dreaming of riding a giant chameleon whilst fighting a clan of ninjas. But in reality, he's helping fight COVID-19 in his sleep. Like thousands of others, he's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments.
I'll fight you.
You go, Max. Search Vodafone Dream Lab and join the Dream Team tonight.
Dream Lab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Want Apple's latest Mac?
From just £34 a month.
With no deposit.
Buy online now from krcs.co.uk. Your local Apple experts. And get your Mac with all this, plus 2 years warranty.
And free next day delivery.
See our full Apple range now at krcs.co.uk. Representative example cash price 103306. 36 months at 33.97. Total payable 1222.92. Representative 11.9% APR.
At Tesco, we've price matched Aldi on hundreds of products like bananas, peppers, chicken breasts, mushrooms, Warburton's bread, strawberries, even avocados. That's Tesco products at Aldi prices. Because now more than ever, every little helps. Tesco. Prices checked on comparable products from GBLD stores and online twice weekly. Price most often found matched excluding promotions. Selected Tesco stores excluding Express and all Northern Ireland stores. Products and their availability vary weekly and by store. Details at tesco.com/Aldi price match.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we're going to chat with Danielle DiMartino Booth, CEO and Chief Strategist for Quill Intelligence, on her thoughts on the jobless claims, the Fed, and the housing market. Plus, we're also going to speak to Papa John's CEO Rob Lynch on the company's earnings and the outlook for the pizza delivery company. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Stocks are up, Paul. They're climbing with the NASDAQ briefly turning positive for the year. Investors are looking to the latest company earnings and data indicating another surge in the number of out-of-work Americans. We check the markets every 15 minutes. S&P's up 1.3% up 38. The Dow's up 1.3% up 312. And the NASDAQ's up 1.3% up 113. The 10-year is up 5/30 seconds with a yield of 0.68%. West Texas Intermediate's up 7.1% at 25.71 a barrel. COMEX Gold's up 0.75% at 17.0110 an ounce. The dollar yen 106.59. The euro $1.782 and the British pound $1.2277. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It's hard to put into perspective data that really defies historical precedent, and that is the position that we are charged with at this point, looking at report after report that shows millions of Americans losing their jobs in record speed. This morning we got more initial jobless claims. Another 3.17 million individuals filed for claims. The question is, how quickly will this recover? How much damage and for how long will this make its mark on the economy? Joining us now, Danielle DiMartino Booth, Chief Executive Officer and Director of Intelligence at Quill Intelligence, also former advisor at the Dallas Fed, a Bloomberg Opinion columnist, and the author of the book Fed Up, an insider's take on why the Federal Reserve is bad for America. Danielle, I would love your sense right now as we watch a demolition of more than a decade of job creation in less than 2 months. Do you get a sense of how quickly these jobs can be brought back on?
Well, it's interesting. We look on the outside of the country in this episode, I think, to figure out what's going to happen in the future. And, whether we want to dispute the data on the virus coming out of China is one thing. But the slowness with which the supply chain is coming back online and the reticence on the part of consumers, bearing in mind China is 60% consumption. It's kind of, I think it's kind of a misconception that China is this manufacturing state. It's not. It's 60% consumption versus our 2/3 consumption. But the reticence that consumers are showing, I think, should teach us something about potentially what's going to happen with our own consumers here in the United States. That's going to determine whether or not we have a second wave, a first derivative, if you will, of layoffs in this country, not directly in leisure and hospitality and in restaurants and in things that were impacted singularly by COVID, but more so because of demand destruction and companies feeling that they have to cut costs. Some of those high-skilled workers that nobody wanted to let go of. We used to talk about skill shortages 3 months ago. So I think that's what it's going to come down to, is whether or not there's a sense of demand destruction that allows for this next wave of layoffs, white-collar workers, higher income to come through. So I'm literally combing through WARN notices on a state-by-state basis every day.
So Danielle, that kind of goes to kind of economic forecasting here. We've seen just in the last week or so, Morgan Stanley, Goldman Sachs, kind of suggesting we're experiencing a bottom in the economy, and even though they're both forecasting kind of dire GDP numbers in the second quarter, they're both looking for a pretty solid rebound in the third and fourth quarter. Is that something that might be a little premature, do you think?
I really think that it is premature, and I'm not saying that they could be right. We could have this U, and I think at this point you're talking about a U.
Yeah.
You're just talking about a U that you would see in the regular alphabet as opposed to a long, drawn-out U. We could see that. It's feasible that we see a lot of demand come back online in the third and the fourth quarter, but I think a lot of it's going to depend on people's attitudes. I mean, I'm in Dallas, Texas. Our stay-at-home has been lifted. I know that there are people that are frequenting restaurants and going about their business and not wearing masks, and then there are people like me who are still sheltering in place by choice. So I think it's going to depend on how consumers react and whether or not their incomes are sustained. I'll be looking really closely at hours worked tomorrow as well.
Danielle, there's a question about whether this time is different than previous episodes of mass job losses, simply because of how big the safety net is, because the United States has been sending checks to American households with previous incomes below a certain amount, and given the unemployment benefits that have been boosted. And this has led some to predict that demand destruction won't be as deep as people are predicting. Basically, people will have money in their pockets to go and spend when the social distancing restrictions are lifted. How much do you buy into that argument?
Well, I think that, there have been some great stories about owners of small businesses who have received PPP loans and gotten severe backlash from their employees, because their employees are like, no, we want those unemployment. We want to be on unemployment insurance. We're going to make more money with that extra $600 a week. So there's something to be said about people wanting to stay on the sidelines because they're going to be drawing a higher income. We saw when the first round of stimulus checks went out that there was a spike in TV sales, in widescreen TV sales. I mean, it's a fact of life that Americans like to consume. If they have the means with which to do this, that's great. But what I'm focused on more is whether or not they're going to be able to go up the consumption ladder, if they're going to sustain their lifestyles, or whether or not we're going to be able to bring 25% of Airbnb's workforce back online, if we're going to be able to bring Uber's workforce back online. Again, especially Silicon Valley, to see these big employers relent, I think is unique, and we should be following that closely.
Danielle DiMartino Booth, thank you so much for being with us. Danielle DiMartino Booth, the Chief Executive Officer and Director of Intelligence at Quill Intelligence, former advisor at the Dallas Fed, and a Bloomberg opinion columnist. Really important right now to understand the scope of job losses. We had Neil Kashkari speaking this morning and talking about how devastating the job losses are going to be, saying it'll take a long time for the economy to recover, saying the number tomorrow will probably be around 16 or 17% with respect to the unemployment rate. But he said, I think the real number is probably around 23 or 24%. It's devastating. And really the question is, how quickly can you get those people back into the labor force?
Yeah, that's absolutely 1930s depression kind of unemployment numbers, Lisa. So again, the ability of the economy to fire back up again will be really fascinating to witness.
Yeah, and there's a question also about the restaurant industry and some of these other areas. I know you interviewed the Papa John's CEO this morning, and we're going to hear from him in just a few minutes. But right now, let's get a check on world and national headlines. Nathan Hager has that with world and national headlines in our Now in studios. Nathan.
All right, Lisa, thank you. Two figures at the center of New Jersey's Bridgegate scandal just had their convictions tossed at the Supreme Court. In a unanimous decision, the justices found Bridget Ann Kelly and Bill Baroni did not commit criminal fraud under federal law, even if they lied about the reason for closing 2 lanes of the George Washington Bridge in 2013. Those closures and traffic jams were political payback because the Democratic mayor of Fort Lee, New Jersey, didn't endorse then Governor Chris Christie's re-election bid. 4 Senate allies of President Trump are urging him to suspend all new guest worker visas for 60 days. In a letter to the president, Republican Senators Chuck Grassley, Tom Cotton, Ted Cruz, and Josh Hawley said the president's order last month to suspend most immigrant visas didn't go far enough. They also want curbs on skilled tech employees and agriculture workers. The Senate votes today on whether to override a presidential veto. Bloomberg's Amy Morris reports.
The debate, the War Powers Act. The Senate wants to require the president to get clearance from Congress for any military action against Iran. The resolution, introduced by Democratic Senator Tim Kaine of Virginia, would have barred troops from engaging in hostilities against Iran, its government, or its military without Congress signing off first. The House and Senate passed the measure after a U.S. airstrike that killed a top Iranian general. The president called the resolution insulting. Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, this pandemic has created a whole new set of consumer behaviors as it relates to eating meals. A lot more people are cooking in, but a lot more people are ordering out. To get a sense of what that means for the pizza business, we welcome Rob Lynch. Rob's the president and CEO of Papa John's Pizza. Rob, thanks so much for joining us here. Give us a sense of how your business has evolved over the past couple of months as the pandemic has really gripped the country and people have become more and more quarantined.
Hi, Paul. Thanks for having me. Our business is built to help in these uncertain times. We are an off-premise, delivery-focused business. We do not have very many dining rooms to speak of. So this is kind of what we do. And we saw the challenges that were coming into North America through our global business. We operate in over 50 countries, both including China and South Korea, some of the countries that were impacted first. And we started, we were able to learn what it would look like. And what we realized is that if we were allowed to continue to operate, that we would have a big responsibility and a big demand for our services. And, in China, we weren't able to operate as the government shut down, but in South Korea we were. And so we took that model and we applied it to, North America. And we focused on making sure that we're prepared for business continuity efforts in our supply chain, making sure that we could staff up to meet the incremental demand and make sure that we had the appropriate sanitization and procedures in place to keep our employees safe so that we could continue to operate. And we did that, and that was a lot of the work that went on in March as we started to see things change. And then shortly thereafter, we implemented a new platform and no contact delivery, and it has made a world of difference. It has allowed our customers to feel confident that when they order food from us, that we're delivering it in a safe way that they can get food. And everyone's doing their part. People are staying home to try to fight this pandemic, and the only way people can stay home is if they have food. And the frontline workers out there in the grocery stores and our delivery drivers and inside team members are doing a great job making sure that we can get through this thing and fight this terrible pandemic.
So what did you kind of see pre and post the quarantine? Give us a sense of kind of how your sales changed once people really were in the lockdown mode.
It's a great question. We got off to a really strong start in 2020. we were up about 7% in the first quarter until mid-March, when we started seeing the initial impacts of COVID-19, and people started to pantry load a little bit, and people really, and the uncertainty created a dynamic where people didn't order out, and so we got through that, and then April hit, and once we got into April, we were about 2 weeks into the shelter-in-place orders in most states and across the country. Our business just took off. And, as we reported yesterday, we saw 27% comp store growth. That's the best month in the company's history. So, we weren't expecting that level of growth, but we've been able to manage it. And, it's amazing what happens in business when you get really busy. People get more productive. People step up to the challenge. And our team has just risen to that challenge. And through their efforts out in the field, out in our restaurants, our customer service scores are up 1,000 basis points over the last 6 weeks. People really appreciate the fact and the extra care that we're taking and the extra efforts we're making to bring them, pizza. And, pizza is not just sustenance. It's actually a little bit of a return to normalcy. It's a little bit of that joy that they, that they're looking for as they stay home for weeks on end. So it's been a really rewarding thing. Our company morale, especially the folks out in the restaurants, has never been higher. And it's really been a privilege and an honor to help out during these challenging times.
All right, so talk to us about your employees, your team members here. As I'm guessing, as you ramped up, I talk about 27% same-store sales growth in April. You need some more folks on the ground delivering the pizzas, making the pizzas, delivering them. Give us a sense of how you're kind of ramping up and taking care of those folks on the ground.
Yeah, it's a really unfortunate outcome of this whole situation is these high levels of unemployment and the way it's impacting our communities and impacting our country. And, we've tried to do our part. We've actually hired over 12,000 people in the last 6 weeks to try to make sure that we have the staff in place to take care of our communities. And frankly, it's been an interesting situation. We have people who were in other jobs that had nothing to do with food service that are now coming in and working in our restaurants. And it's been a great dynamic, them coming in and bringing their talents and their passion. And like I said, morale's never been higher. These folks are coming in not just because they think, I need a paycheck and delivering pizza. I mean, we really try to reinforce, and I think it's really resonated, that these are essential services. These are, this work is important. This work is making a difference. It's allowing the folks to stay home that need to stay home. And so the 12,000 people we've hired over the last 6 weeks have come in. Our retention has been great, and we're looking for more. I mean, we need more people because the business continues to thrive, and we want to continue to get through these times and help out as much as we can.
Rob, how do you think this is going to play once we get to the other side of this? As it relates to your business, are you guys thinking about how consumer behavior may be changing, either positive or negative for your business?
We've faced multiple economic challenges over the last 20 years. If you talk about the dot-com bubble, you talk about the banking and real estate bubble back in 2008. And, I think when those happened, people said, the world's never going to be the same again. And then the economy recovered, and I think we kind of went back to normal. This is a health crisis. I think this is going to be different. I think that until we have the ability through a vaccine or even better, a cure, to give people confidence in their personal safety and the safety of their families, people are going to, regardless of how latent the virus becomes, and we flatten that curve, I think people are still going to have a concern about going out into social environments and being in close proximity to people that they don't know and people that could potentially present a risk to them. And that's a sad thing. I hope that we can get past that, but I do think that until there's a way to give them confidence, we're going to see that. And so I think the dynamic that's in place right now, that's happening right now, where people are ordering almost everything through digital channels, and it's showing up at their door, and they are consuming either goods or services or food at home. I think that's gonna permeate for a while. I think there's going to be a tail on this, regardless of whether or not states open back up or countries open back up, and I hope that we can get past that, because I love the fact that we've got a great entrepreneurial dynamic in the food service industry, and we've got a lot of people depending on customers coming back to their restaurants and their dining rooms, and so I hope that we get past that as quickly as possible. But as long as people are continuing to rely on delivery and staying home more often, we'll be there to help out.
That was my discussion with Papa John's CEO, Rob Lynch, really talking about the business, how it's changed. They had just a surge in delivery activity in April, not surprisingly, but it's up 28%, the strongest month in the company's history. So they're hiring more workers, more delivery folks to kind of meet the demand, but really interesting to see how the changing dynamics in the food services business is benefiting certain companies, particularly the ones that really are focused on delivery, like Papa John's. So
it was a great interview.
It was really interesting to hear him talk about his business and trying to balance the growth of the business with trying to protect the workers as well. So interesting to hear from him. They had some very good numbers. Just looking at the numbers here on the screen, Lisa, the S&P still up about 1.2%, 33 points, 2882 on the S&P. The Dow also up 1.2%. That's 280 points, let's call it, on the Dow, putting the Dow Jones at 23,945, just below that 24,000 threshold, and NASDAQ up about 1%, 89.39 on the NASDAQ. So a risk-on day today, Lisa, despite the fact that we got, again, another grim jobless claims number this morning.
Yeah, risk on, but you're seeing a bid into longer dated treasuries, which raises a question about how much demand there'll be amid a record slew of issuance. Joining us now to discuss, Ed Al-Husseini, senior interest rate and currency analyst at Columbia Threadneedle Investments, with about $500 billion of assets under management based in Minneapolis. Ed, thank you so much for joining us. I want to talk about this unprecedented financing plan that the Treasury Department unleashed yesterday, with a greater amount of longer dated securities than people had been expecting. At what point will investors struggle to absorb this?
Yeah, I mean, that's a really good question, and thanks again for having me on. I think, when I think about the demand side of the equation here and who's the marginal buyer, clearly at the moment it's the Fed. And the question we have to ask ourselves is the underlying macroeconomic outlook going to improve sufficiently in, say, the second half of the year for the Fed to be able to step back and reduce the scale of purchases? And I suspect the answer is no, particularly when it comes to inflation. So in my mind, the demand from the Fed, the demand from the domestic sector in the U.S., which has been the marginal buyer up until this crisis, is going to be robust enough to offset the supply coming online.
So, Ed, what is your thought as to how this economy may develop for the remainder of the year into 2021? I mean, it's, I guess it's all dependent upon the virus itself. But, boy, the Fed and Congress, as it relates to stimulus, have been, trying their best to kind of support this economy. How do you think that might play out?
Yeah, I mean, this is the hardest question to answer at the moment. Obviously, I think there's a number of different potential scenarios for the second half of the year as the economy attempts to restart. In my mind, two things are key right now. The first is the extent to which households and corporates start to delever coming out of this crisis. The early indications, and this is very consistent with the damage we've seen in the labor market, the early indications are that we will see more precautionary savings out of households, and that we will see corporates delever as part of the restructuring process and as part of sort of a weaker growth outlook. That, to me, speaks to a recovery that's relatively sluggish and that will require significant amounts of stimulus, not only through the end of this year, but very likely next year as well. So I think we have, yeah, go ahead.
Well, that just sounds really deflationary to me, the idea of deleveraging, people pulling back on spending, saving more, and deflationary, even though the U.S. is printing an unprecedented amount of money, given the fact that the Federal Reserve is basically monetizing the debt of the Treasury Department. Is that how you see things, deflation, in the years ahead?
I think the pressure and the skew to inflation is very likely to be to the downside. And to a large extent, markets have done a relatively decent job of pricing it in. So if you look at, forward-looking break-evens, five-year break-evens are at about, 1.5%. That speaks to core inflation, slightly above 1% over the next decade. So markets have absorbed that message. I think that's been the learning over the last decade, is that Fed intervention in the form of QE has a very difficult time of reanimating inflation.
So it's interesting, Ed, one of the issues here, I think, as I look at the DXY index, sitting there right here at 100.36, is there any reasonable bear case, just real quickly, Ed, for the dollar?
I think we would need to see some real positive developments on the health front to take some of the risk off bid for the dollar. The dollar remains the preeminent safe haven currency, and that's been one of the reasons it's been so strong. So we would need to see, I think, in the short term, some developments on the health front, whether that's the caseload collapsing much faster than anticipated, or a vaccine of some sort on the horizon, to take that safe haven bit off, steepen the treasury curve, and weaken the dollar. In my mind, that those remain relatively marginal scenarios for the next 3 to 6 months.
Ed Al-Husseini, thank you so much for being with us. Ed Al-Husseini is Senior Interest Rate and Currency Analyst at Columbia Threadneedle Investments, based in Minneapolis. And indeed, we are seeing a bid into treasuries today, despite that record issuance. Speaking to Ed's point here, that he expects there to be plenty of demand for the debt, even as the U.S. ramps up issuance. Coming up, we are going to be hearing from Andrew Cuomo. We'll also be taking a look at what to expect from tomorrow's jobless report. I'm Lisa Abramowitz, along with my co-host and colleague Paul Sweeney. This is Bloomberg Markets.
Business is like a...
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. It's not impossible. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the Uswitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
Please be wary of people you've met online who claim to be stranded abroad and urgently need money. Always take time to think before you act, and if you think you're the victim of fraud, then let your bank know right away.
For more advice on keeping your money safe, visit santander.co.uk.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
What we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up, we're going to speak with our good friend Barry Ritholtz, founder of Ritholtz Wealth Management and a Bloomberg opinion columnist. Get his thoughts on the markets right here. Plus, we're going to hear from San Francisco Fed President Mary Daly as she sits down with Bloomberg's own Michael McKee. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg?
I'm here. Equities are higher, Paul, shrugging off wider than expected U.S. jobless claims as oil prices gain amid more hopes for recovering demand as the pandemic reopening continues. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is up 1.2%, up 33. The Dow is up 1.1%, up 256. And the Nasdaq's up over 1%, up 94. The 10-year is up 10.30 seconds. The yield is 0.66%. West Texas Intermediate crude is up 6.8% at $25.63 a barrel. And COMEX gold's up 0.7% at $16.9950 an ounce. The dollar yen, 106.54. Let's take a look at the euro, $1.780, and the British pound, $1.2288. Peloton Interactive shares are up to another record high after third quarter results and boosted year-end forecasts blew away Wall Street's estimates as everybody realizes they've got to sweat at home because they can't go to the gym. Peloton's up almost 14%. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Lisa and Paul.
Thank you so much, Greg Jarrett. You know, we do this segment every day, the small and mid-cap report with Dave Wilson, Bloomberg stocks editor, who does join us now. But as we get an increasing number of reports about how small businesses are struggling disproportionately, it's quite amazing to see the shares of these companies outperform. So please explain, Dave, why are we seeing that today?
I mean, because the stocks have been so beaten up, you could argue. The Russell 2000 still down 23% for the year. That's more than twice as much as the S&P 500. That said, smaller companies getting the upper hand today. Russell 2000 up 1.6%, and the S&P 500 higher by 1.2%. Biggest gain, the Russell in the moment, belongs to Genmark Diagnostics. The ticker is GNMK. The maker of genetic testing equipment has risen about 25%. Genmark sold $70 million of stock and will use some of the proceeds to repay debt. CAI International, whose ticker is CAI, has climbed about 20.5%. The container leasing company's earnings and revenue beat analysts' average estimate in a Bloomberg survey for the first time in 6 quarters. Intivity Health, ticker TVTY, has advanced almost 18%. The health and fitness company says looking at options for weight loss unit Nutrisystem, which it's only owned for about 14 months. The Russell's steepest drop belongs to Vista Outdoor, ticker VSTO. The maker of ammunition has fallen 29.5% after saying this quarter will be break-even at best. Analysts were looking for a profit on average. And Spirit Airlines, ticker SAVE, has fallen 13.5%. The discount carrier posted its first quarterly loss since going public in 2011, and that loss was wider than analysts expected.
Bloomberg Stocks editor Dave Wilson, thank you so much. Well, the discussion here as it relates to the pandemic seems to be switching over or migrating or evolving over to when the U.S. economy can open up. How should we open up? And a lot of that is predicated upon the virus itself and is there a second wave and so on and so forth. And those are relying upon a lot of models from healthcare, from scientists. The real sense, though, is a lot of uncertainty. Barry Ritholtz, Bloomberg opinion columnist and host of Masters in Business on Bloomberg Radio, is also the chairman and chief investment officer of Ritholtz Wealth Management. He joins us on the phone here, Barry. So, Barry, thanks so much for joining us. But as we think about this reopening, we're really kind of flying blind, aren't we? Because we've never experienced this before.
To say the very least, the closest thing we had was the pandemic just about a century ago, the so-called Spanish flu, and the technology, the medical technology that existed then was so different than today. They had a lockdown, and you could see in the history books the cities and states that followed the lockdown suffered a much less substantial second wave. And so we're going to run an experiment that was done a century ago to see which states really get hit by a second wave, which states flatten the curve, and which don't. It's unfortunately going to be a experiment with real life consequences.
Barry, you recently wrote a column about how models can never get things quite right. And when I talk to economists, we've spoken with a number of thinkers and investors who basically say we're flying blind. We don't know what to expect. And yet, by X, Y, and Z, how can people be investing with any conviction right now based on the level of unknowables right now out there?
So that's a deeply philosophical question, and I'll try and
you
give you
can count on me, Barry, anytime.
All right, let me wonk out on you a bit. So first, we use models constantly. You use models all the time, and the underlying premise of all these mathematical depictions of the world are simply that, hey, the future is likely to look very similar to the past. And as long as there aren't any radical changes going forward, we can rely on our models. Some models, and I use the example of Netflix, hey, when Netflix uses its model to say, based on your viewing habits against what the rest of our 167 million subscribers like, we're going to predict you're going to like this. If that model goes wrong, well, who cares? You wasted 90 minutes. But in other circumstances, when things that have never happened before happen, the models just effectively lose their mind, and you end up with things like negative oil prices or, hey, tomorrow is the BLS employment situation report. There has never been a period in history where 30 million people filed first-time unemployment claims in a month. So whatever comes out of that BLS model, I suspect is going to be not exactly precisely depicting reality, because that's the sort of input that breaks models.
All right, so Barry, the models, okay, limited applicability here in these unprecedented times. So are investors just simply supposed to just kind of look past this quarter's earnings, look past the second quarter GDP number, look past the unemployment data, and just kind of focus on 2021 and put a multiple on that?
2021, 2022, 2023. There are lots of variables, the biggest being how soon do we have a treatment, and beyond that, how soon do we have a vaccine. If you live with a high-risk person, an older person, someone with immunosuppression or any other comorbidities, and there is a treatment that comes out, and we're starting to see lots and lots of promising research, well, as soon as that comes out, this is pretty much behind us, or the process of putting this behind us really ramps up. And there was just a piece in the Washington Post yesterday about the antibodies found in llama blood seem to be smaller than human antibodies and effectively stopping the virus. So who knows what will finally be the magic bullet. Once that happens, we can start looking at 2021 and 2022. And philosophically, to go back to Lisa's question, the uncertainty issue is always a misnomer, because the future is always uncertain. And during normal times, we do a nice job of lying to ourselves that we think we have some visibility. We think we know what the future holds. Go back and look at any of the corporate guidance from any year over the past 100. They are always wrong. They are always incrementally readjusting as they get closer and closer to that date. It's just when a period like this happens, we find it harder to lie to ourselves, and we have to admit we have no idea what the future looks like.
All right, Barry. Barry Ritholtz, founder of Ritholtz Wealth Management. We've moved from the philosophical. Let's go to the practical. And what we see right now is clearly a profound shift, or perhaps an acceleration in the trend away from old business, the old economy, to the new economy, which is much more reliant to online activity. I'm just wondering how you're advising your clients to invest around that, given the fact that that's being priced in spades right now.
So we don't think that these sort of external events should cause people to fully rejigger their portfolio. You should have a financial plan. It should assume a certain amount of risk and a certain target, and you want to stay with that. If you look at the changes in valuation between the U.S. and overseas, all right, if you've been very overexposed to overseas and you want to throw all that back, you can do that. If you've been underexposed to the growth sector, to technology, you can make a change in that direction. I don't see any sort of inflation on the horizon, but a number of people have been making that claim. And just as a little bit of an insurance policy, if you want to buy the Treasury inflation-protected securities, the TIPS bonds, that certainly could make sense to a portfolio. I think we're more likely to see deflation than inflation, but hey, you don't complain every year when your house doesn't burn down and you already paid for fire insurance. So those are the sort of things, a little trimming you could do around your portfolio. But think back to events like September 11th or the 87 crash. Those aren't the sort of things that warrant a wholesale redo of a portfolio. They should just make you think, hey, am I properly positioned for when we get past this externality? And a lot of people are discovering that they weren't properly positioned heading into it, and this is as good a time as any to readjust.
Hey, Barry, thanks so much for joining us. As always, Barry Ritholtz, Bloomberg opinion columnist and host of Masters in Business on Bloomberg Radio. Also founder, Chairman and Chief Investment Officer, Ritholtz Wealth Management, joining us on the phone. We always appreciate that. Right now, let's head down to Washington, D.C., get world and national headlines with Nathan Hager. Nathan, what do you have for us?
Well, Paul, we have some breaking news once again. One of President Trump's personal military valets has tested positive for the coronavirus. The White House confirms what CNN first reported, that it was a Navy valet who's been infected. The White House says President Trump has been tested and has since come back negative. These military valets do work very closely with the president and the first family. The White House also says President Trump spoke by phone today with Russian President Vladimir Putin. According to Dow Jones, the president told the Russian leader the U.S. is committed to effective arms control that includes Russia and China, that he looks forward to future discussions to avoid, quote, a costly arms race. House Republicans are planning a report on China by Election Day. Minority Leader Kevin McCarthy announced a new task force on China led by Michael McCall. He's the ranking Republican on the House Foreign Affairs Committee. McCarthy says the group will put together a report by October on issues including the spread of the coronavirus. The Trump administration has repeatedly accused China of covering up the extent of the outbreak, prompting this from Chinese Foreign Ministry spokeswoman Hua Chunying.
We want to urge the U.S. side once again to stop spreading false information, stop misleading the international community.
Secretary of State Mike Pompeo says he is still trying to work with China to get viral samples and to identify the so-called patient zero of COVID-19. Democratic Senator Elizabeth Warren is blasting what she calls a taxpayer-financed bailout for the oil and gas industry at a time when millions of Americans are struggling to make ends meet. In a letter to Treasury Secretary Steven Mnuchin, the former presidential candidate said it would be unjustified and unnecessary to give non-creditworthy oil producers exclusive access to funding when other loan programs can help companies weather the pandemic. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg, Paul and Lisa.
Thank you so much, Nathan. We are awaiting a conversation with San Francisco Fed President Mary Daly, who's sitting down with Bloomberg's Michael McKee. I'm very curious to hear what she has to say about the possibilities of future stimulus from the Federal Reserve, given that they've already announced they're going to be buying corporate bonds, including some with junk ratings. I'm also very curious about their inflation target. It was a really interesting column today on Bloomberg Opinion by Noah Smith about how he hopes that the Federal Reserve actually increases their inflation target in order to try to get things up and inflate away some of the debt that the U.S. is incurring. I mean, if that's possible, I don't know.
Yeah, if that's possible. I mean, we've been running well below the target inflation for so long now, and it's been kind of a lower for longer type of scenario. But the Federal Reserve, I think, as we look back, just with a little bit of hindsight, Lisa, we could say that the Federal Reserve has done generally a pretty admirable job dealing with this pandemic. They were early, they were forceful, they were clear, and I think the markets clearly have responded with that. We've got the equity markets climbing back almost roughly half the loss from the initial pandemic.
Time will tell. There's also a question about companies that were able to get financing amid the Fed stimulus. What will be their future? Will they be able to continue going as a matter of business?
Yeah, exactly. I mean, I think, we heard earlier today about small and mid-sized businesses really feeling the pain here, and hopefully the stimulus is something that can certainly help them here as we deal with the pandemic. It continues to be a big issue. So coming up, we're going to have Mary Daly sitting down with Bloomberg's Michael McKee talking about their efforts. Let's listen in right now.
Markets on Bloomberg Radio and TV worldwide. I'm Michael McKee. Joining me now for an exclusive interview, a special guest, San Francisco Federal Reserve Bank President Mary Daly. Thank you very much for joining us today. Let me first ask you how companies in the 12th district are faring, the caveat being you have the largest geographical district of all of them, and so there are many different cities, many different industries spread around it. But in general, what are companies saying about financial conditions now and about what they see as the economy begins to open up again as far as how fast things will come back?
Sure. Well, like every other company in the United States and even globally, they're feeling a lot of pain right now because we've had to shelter in place for public health. And they know that. They want to do the right thing, but they are definitely feeling the pain. Now, when thinking about getting past this, they're doing everything in their power to get their finances in order, take advantage of the programs that are available either from Congress or the Fed to ensure that they can get past this and be ready to reopen, but do it safely. No one who I talk to is looking at a V-shaped recovery. They really think this will be gradual, and it will take time to build confidence back up for both workers and consumers as they re-engage in economic activity. But they are more optimistic than you might think. They're ready to reopen and re-engage.
I know you want the Paycheck Protection Plan to help, but is there some evidence that it's doing that? Are companies hiring back workers now?
Well, the Paycheck Protection Program is really about keeping workers that they have. And when the economy reopens, then we expect those workers to come back and actually perform work. But right now, most of the country remains in shelter in place. And so we're just providing emergency support to businesses and to employees with unemployment insurance so that we can get through this and wait to reopen.
Well, the Main Street program, still not up and running. Is there a chance that that's going to get started too late to be of real help?
Well, the Main Street program, one of the things that with all the Fed's facilities is there have been these what we would call announcement effects, that when we say we're going to have a facility, the markets start to function better. And we're already seeing that across the board in all the areas where there were dislocations. So, no, I don't think it's going to be too late to be effective. I think it's already helping markets do the lending that's so important for American businesses and households.
I don't really want to get into the alphabet business of V's and W's and things like that, but you were kind of negative about the idea of any kind of growth this year. You didn't see a couple of weeks ago any kind of expansion until 2021. Is that still your view?
My view is that 2020 as a whole, so let's move out of the quarterly math and just think in annual data, that 2020 as a whole is going to be a negative year, and then we'll start to see positive year in 2021. I think that's about as good as forecasting can get right now, this quarterly forecasting. Forecasting is always a tough business, but it's become very tough right now because it's so dependent on the evolution of the virus and what actions we have to take to constrain it.
Obviously, the markets are seeing things a little bit differently. I'm wondering what you think of that and the idea that just a short while ago, the Fed funds futures market priced in negative interest rates starting in January. I know that's not a policy procedure that you guys are really interested in, but what do you think of the way investors are looking at it?
I think investors are looking at it as, essentially the coronavirus is with us until we get a vaccine or some nice way to control it and, helpful way to control it. And they see that as distant, and then they price that in. And that's what we're all dealing with. But I am an evidence-based optimist, I guess, and the evidence I'm seeing is we came into this coronavirus with a strong economic momentum, one of the strongest economies in our lifetimes, and we're already seeing, businesses are fundamentally entrepreneurial, and we're already seeing them start to think about, okay, how do we re-engage while we live with the coronavirus until we do get a vaccine or some other remediation program. So I have a little bit more optimism there.
Municipal finances kind of in tatters around the country. What are you hearing from cities and states in your district?
Well, cities and states in my district are really in trouble. They're struggling, and they're trying to do the thing that we're all trying to do, which is figure out where can we cut costs when revenues go down. So they're facing tremendous declines in revenues, and then they're figuring out where can we keep essential services and what cuts can we make. So this is just hard, and we're working actively with all of our states and localities to think about what's the best way to make these difficult choices so that we can all get to the other side of the coronavirus and be well positioned to go forward.
Do you worry that we could see sort of a cascading doom loop here if cities and states have to lay off people and that hurts confidence and the virus hangs around, that we may not get out of this very quickly?
Well, you've really touched on, I think, the key word, confidence. Confidence is everything. We have to be confident that the virus is under control and that we can leave our homes and re-engage in economic activity and do it safely. We have to be confident that the economy is going to grow enough for firms to rehire workers. And when states and localities have to make tough decisions and people read even about more layoffs in the press, then of course that is a negative on confidence. But some positives on confidence is, we're starting to reopen and businesses are doing it safely. The number of places on the sidewalk I see with tape already marked off for 6 feet safe when we haven't even reopened yet. That tells me businesses are starting to think about re-engaging in economic activity, and I think that's a confidence boost.
Tomorrow's Jobs Day. Of course, we're all excited by that. There are a lot of questions about the statistical nature of whether this will be a distorted report or not. But let me just ask you, when you see forecasts for 20 million or more jobs lost in a month, as an economist, how do you process that? How do you think about it? Do you just throw it out and say, let's move on to the next thing?
No, I'm just being really realistic. This is an outcome of the policy that we had to take to fight the coronavirus. So it really is an example of we're all in this together. And that's why I'm very supportive of all the actions both Congress and the Fed have taken to say this is no one's fault. All of us are just joining together to shelter in place, stop the economy, hard stop. That throws millions, more than 30 million people out of work and countless others who don't even file for unemployment insurance who might want to work. These are just tough times, and it's a responsibility to help them weather this and then try to get the economy back in action as soon as is safely possible.
Another concern out there is the direction of prices. We have disinflation now. Do you worry we could see some deflation? And then down the road, given the amount of stimulus that you and others have put into the economy, do you worry about inflation?
So I'm not worried about deflation nor inflation getting above our target. As you know, we came into this crisis with inflation running a little bit below our target, and now we have some disinflationary pressures on top of that, the oil prices, and also just the great demand shock that we've seen. Aggregate demand is just much slower. So I think that we are really looking at inflation being tepid, not getting up to our 2% target for a while. But I really saw in the financial crisis and its aftermath that inflation expectations remain well anchored. The credibility the Federal Reserve has built up over the past 30 years really helps anchor those inflation expectations. And we continue to reiterate that we'll do everything in our powers to achieve our dual mandate goals. And I think that gives market participants, households, and businesses confidence.
The Fed's guidance on keeping rates near zero says it's until we have weathered recent events. Could you be more specific about what that means to you?
Well, the guidance specifically says that until we've weathered recent events and we are assured that our dual mandate goals are back on track, price stability and full employment. So what it means to me is that we're committed to keeping interest rates right now in a supportive position, but as the economy can be open in a stimulative position until we can feel successfully like we're achieving our dual mandate goals. And for me, that's some time off.
The government is going to have trillions in lending to American companies out there, trillions in added debt. Are you going to be able to raise rates if inflation starts to rise, or are you going to be stuck sort of like in a Treasury Fed accord again because raising rates would be too damaging to the fiscal situation of the country?
We always make our decisions based on the same two goals what Congress gave us. I mean, Congress was very clear. We are to achieve price stability and full employment, and we are also a lender of last resort, which we've had to use in this particular crisis. But let's come back to the fundamental question. Am I worried about inflation rising too high? And the answer there simply is no. And we had a lot of those same concerns about maybe inflation would get out of hand and we would be in an awkward position after the financial crisis. It simply didn't materialize. The pressures on inflation right now are downward, not upward.
Well, right now we're looking at a situation where you're basically putting a floor under the economy. When we start to reopen, and maybe you look to stimulus, what's the next thing that the Fed would do?
So I have been public about saying that, if you put a stack ranking of our tools in front of anyone, I choose the funds rate first. And so we aggressively moved that down to near zero right away. The second tool that has been really powerful, not only here, but at other central banks across the globe, has been forward guidance, helping market participants, households, and businesses understand how long we will continue to accommodate and stimulate the economy. And then, of course, we have balance sheet policies, quantitative easing. Right now, we're using our balance sheet to provide much needed liquidity to all types of financial markets, but that can be another source of stimulus when we have, as we did in the after the financial crisis when we engaged in QE. So we have many tools left to use, and those are the order in which I would use them.
All right. Well, we'd like to offer our thanks to San Francisco Fed Bank President Mary Daly for joining us today here on Bloomberg, and thanks to our radio listeners on Bloomberg TV, the European close.
Thank you so much to you, Michael McKee, for that interview. Fascinating to hear San Francisco Fed President Mary Daly talking about their path forward. She is not worried about inflation or deflation. She does think that policy is in the right place. I want to give some size and scope here as we talk about the Fed intervention, Paul. Let's take a look at the balance sheet here. It has risen. It has increased by $3 trillion since September 2019, currently near $6.7 trillion, with the expectation that it will rise to $10 trillion by the end of this year, basically hoovering up all of those treasuries that the U.S. is issuing, as well as corporate debt, which should begin at least through ETFs this week.
Yeah, just unprecedented activity by the Fed. And as we heard from Mary Daly just now, she's comfortable with that type of activity. And I suspect that, and she seemed to suggest that the Fed is comfortable keeping that activity level kind of at the current level, until we do see a material improvement in the economy.
Yeah, and right now we're still in the heart of it, with some saying it's poised to get worse before it gets better. Right now, let's get a check of the markets. Greg Jarrett has that for us with the Bloomberg Business Flash. Greg.
Well, thank you. All three of the U.S. Main equity benchmarks are higher. It's a mixed session. The news from the top U.S. and Chinese negotiators will speak as soon as next week on trade that helped boost sentiment. The number of new claimants for unemployment benefits surged by about 3.2 million. Though that's a bad number, it was expected by investors, and the markets seemed to take it in stride. Treasuries did edge just a bit. Let's go ahead and check the markets as we do every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is up 1.4%, up 40. The Dow's up 1.3%, up 318, and the Nasdaq's up 1.25%, up 110. The 10-year is up 13.30 seconds now with a yield of 0.65%. West Texas Intermediate crude is up 7.6% at $25.78 a barrel, with COMEX gold up over 1% at $17.0630 an ounce. The dollar yen, 106.46. The euro, $1.0786, and the British pound, $1.2301. Frontier Airlines quickly reversed course on a plan to charge extra for passengers who want to guarantee a spot next to an unoccupied middle seat. This comes after several members of Congress accused the discounter of seeking to take advantage of the coronavirus pandemic and profit on it. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We are waiting the daily press briefing from New York Governor Andrew Cuomo at the bottom of the hour in just a moment, so we will bring that to you when we get it. Lisa, just looking at the markets here, it's one of those days, we've seen it before here in this rebound off the bottom where maybe even in the face of some really brutal economic data today, it's the jobless claims number of another 3.17 million, that you've got an up market, and a significantly up market, up about 1.45% on the S&P, just really suggests that people are really looking forward to the other side of this. And in the interim, we've got, as Mary Daly said, from the San Francisco Fed, an accommodative Federal Reserve.
Yeah, it's interesting because today actually you're seeing the S&P outperform the NASDAQ, which is interesting because you had seen the big tech names really leading the charge. Look, I think a lot of investors are looking past the second quarter, which is brutal by every stretch of the imagination. And they're saying, look, the economy is starting to reopen. We're going to get a resurge in activity. We're already starting to see that on the margins in China. And this should lead to a bottoming out in the economic data. The problem with that, again and again, is when we hear from people who actually study the virus, they're expecting a resurgence in the fall. So I'm struggling to understand how things will reopen in a way that the market is currently pricing in.
Yeah, exactly. And as we'll hear from Governor Cuomo, when you think about the state of New York and how he's thinking about reopening the state, it is a very gradual reopening, and it's driven by data, and it's driven by the metrics that the data create. And there's also an absolute willingness to dial it back if the data turns negative in terms of hospitalizations and so on and so forth. So there's the New York framework, whereas some other states' framework seems to be looser and just kind of let's open it up and see how it looks kind of thing. So we'll have to see how it plays out across the country.
I think there's also a question, as Paul Krugman, the Nobel laureate, was saying yesterday. He was talking about the Fed model, this idea that yields are just so low right now on government debt that it's pushing investors into stocks. And that argument is something people say, that basically because of how much money has been pumped into the market, essentially, especially through these quantitative easing purchases of corporate debt, that investors have nowhere else to go but equities. However, if you peel back the cover, you can find it's a really disjointed recovery. It's not everybody's winning. You've got big losers and you've got big winners. And a lot of it has to do of which capital structures and which business models can sustain an online world. And I think that that's a really compelling point, the sort of acceleration right now of trends that were in place before and how that will play out in the upcoming years, Paul.
Yeah, that's exactly right. You mentioned the trends that were already in place. The market, we already had negative interest rates, as we've been talking about, in Germany and Switzerland and Japan. Where can you go? And the interest rates in the U.S. were already low before, but now it's just at unprecedented levels. So I think it just kind of makes that argument once again. Plus, as we've been talking about, and as we just heard from San Francisco Fed President Mary Daly, the Fed seems to be comfortable looking at a continued easing, a continued accommodative effort as it relates to keeping liquidity in the financial markets. And in that scenario, that's generally supportive of equities. But as you suggested, Lisa, it hasn't been across the board. We've seen, again, some really strong winners out of some of the big tech names that have been good for it in the past, while some of the consumer-facing names, while they've kind of bounced off the bottom, they're still well below their highs here. So it's a little bit of the haves and have-nots.
Let's talk about one of the retail names, Neiman Marcus, filing for bankruptcy today. largely expected, right? I mean, everybody was expecting them to file for bankruptcy, but this comes on a series of bankruptcies, both in the retail space and beyond. Gold's Gym, for example, New York Sports Club is thinking of doing the same. And, you know, the fact that these companies are going bankrupt really raises this question, which is, are they really being pushed into bankruptcy because of the pandemic, or did they have over-leveraged capital structures and they're taking this opportunity to cram down some of their losses on the debt investors, eliminate some of that debt to emerge as a stronger company? And I think that this is actually something that people have been talking about, right? I mean, are we seeing a wave of COVID-19 bankruptcies yet, or is this largely an issue of companies taking advantage of this? That's
a great point. Yeah, that's a great point. It's probably here a little bit of both, where the companies with the most fragile balance sheets are at risk here. Right now, let's head to New York. Governor Andrew Cuomo with his daily press briefing on the pandemic.
New York Medical College today. Thank you, Dr. Kadish, for having us. Westchester County, great county executive George Latimer, also home to our great Senate leader Andrea Stewart Cousins, and it is a beautiful day. It is so beautiful. I'm going to go home after this, take the motorcycle out. I'm going to go for a ride. I'm going to wear my mask on the motorcycle. Protects from COVID virus. Also keeps bugs out of your mouth. Works on both fronts. It is a time of high anxiety. I understand that. A lot of pressure all across the country. But even more at times of high anxiety, it's important that we stay with the facts and the truth. John Adams was defending the British at a time when the American people hated the British. Facts are stubborn things, and whatever may be our wishes, our inclinations, or dictates of our passions, they cannot alter the state of facts and evidence. Lincoln, big believer in the American people, always. Let them know the truth, and the country is safe. I love Lincoln and the wisdom and the economy of his language. Let them know the truth and the country is safe. Here are the facts where we are right now. 8,600 total hospitalizations. That number is down. That is good news. And it's a fairly significant drop, so that is good news. The net change in hospitalizations you see is also down. That's good news. Intubations is down. That's good news. The 3-day rolling average of hospitalizations is also down. You see the curve. You see the outline of what we went through. You see how fast it went up. Reminds you how fast the infection rate can spread. Look at how fast those numbers went up. And you see how once those numbers are up, how long it takes to get them down, right? We're on the downside of the mountain. Downside of the mountain is a much more gentle slope than what we went through going up the mountain. We wish it was a steeper decline, but it's not. This is the worst number every day, is the number of deaths, 231, and you can see how slow that has come down and how painfully high it still is. This is a chart of the number of lives lost. And again, you can see how fast that infection took off and how many lives we lost. And once that infection rate is high and people are getting infected, you can see how long it takes to slow it down and reduce the number of deaths. And they're coming down at a painful, slow level of decline. The top priority for us, one of the top priorities for us, has been protecting our front line and our essential workers. You have to remember what happened here. It all happened so fast that it's almost hard to gain perspective on it. But the frontline workers, they showed up and went to work and put their lives in danger so everyone else could stay home. I laid out the facts, as Lincoln said, to the people of this state, laid out how dangerous this virus was, advocated and argued based on those facts that we needed to close down schools, close down businesses, stay at home. People did that. In the next breath, I said, and by the way, we need you essential workers to go to work tomorrow. After just having explained how dangerous the virus was, to justify shutting down society in a way it had never been shut down before, next breath, essential workers, I need you to go to work. Hospital care, I need you to go to work and help people who come in with the COVID virus after we just discussed how dangerous the COVID virus was and how little we knew about the virus. Look at the courage that those frontline workers had to show. I mean, it is still amazing to me. And I just want to make sure on a human level we're doing everything that we can for them. So we've been aggressively testing the frontline workers to find out who needs help, how many people actually have been infected, and we've been working with the police and transit workers and healthcare workers. We tested 25 downstate healthcare facilities. Downstate New York is where the predominance of the virus was, over 27,000 employees. So it's a very large sample. And what we found out is really good news, and one of the few positives that I've heard in a long time. When you look at the percentage of people who have the antibodies, which means they were infected at some time in the past and they're now recovered, of the healthcare workers, in Westchester 6.8, New York City 12.2, Long Island 11.1. That is about the same or lower than the infection rate among the general population. So Westchester, the infection rate among the general population is 13.8, almost 14. Westchester healthcare workers, it's about half of the rate of the general population. I mean, that is amazingly good news, right? We were afraid of what was going to happen, and the healthcare workers actually are at about the same or lower than the general population in that area. So that is makes 2 points to me. Number one, our healthcare workers must be protected. They must have the PPE. We've been saying that all along. It was a mad scramble this last time to get the PPE. Internationally, it was a mad scramble for all of us. That can never happen again. We have to have the PPE. We have to have the stockpiles. We did an order that said every hospital has to have a 90-day supply of PPE at the COVID rate of usage. So we'll never go through this again. But it also shows everybody how important the masks and the gloves and the sanitizer are, and that they work. You know, it's not that the frontline workers get anything especially more sophisticated than the masks that people wear, the N95 masks. You know, they wear a gown, they wear a mask, they wear gloves, but they follow protocol. And those masks work. They work. If they're working for frontline workers, they're going to work for people in their day-to-day lives. And the precautions of gloves and sanitizing, they work. Also, during this time, it's important that we protect New Yorkers who are facing financial hardships. You have people who live paycheck to paycheck. The majority of people in this state live paycheck to paycheck. All of a sudden, the paycheck stops. Federal government issued a one-time payment of $600, unemployment benefits, but it's not making up the gap for many, many families. And they are struggling, and we want to make sure we're doing everything we can. We have a problem in upstate New York where many of the farms can't sell their product. You had a lot of farms that were literally just dumping milk that the dairy farms had produced. But at the same time, you have people in downstate New York who are going hungry and can't pay for enough food. Tremendous demand on food banks. So we've been putting the two together. It makes no sense to have upstate farmers who can't sell their product and downstate families that can't get enough to eat. So we have been funding efforts to connect the farmers to the downstate food banks. And we've done that with about $25 million to what we call our Nourish New York initiative. And that has worked. We're funding about 50 food banks that have 2,100 farms that are delivering food to those food banks. And about 20,000 households in the state are participating in that. And the volume of food and product that is not being wasted, that is supporting upstate farms and helping downstate families is tremendous. We want to continue doing that. The state budget is very, very tight right now, going with what's going on with the economy. So philanthropies, foundations, there are a lot of people who want to help. This is a great cause, and I would suggest that they help so we can do even more. People literally are worried about being able to pay rent. You don't work for 2 months, and that rent bill keeps coming in. You know, it's not that the bill payers, the bill collectors have taken a vacation. The bill collectors work, right? They still send the bill, and you still get collection notices. We did by executive order that I issued, a moratorium on residential or commercial evictions. You cannot be evicted for non-payment of rent related to this COVID situation. And that went through June. So nobody has been and nobody can be evicted through June, either residential or commercial. We're going to take additional steps of banning any late payment fees because a person couldn't pay the rent during this period of time. Also allowing people to use the security deposit as a payment, and they can repay it over a prolonged period of time. But also I'm going to extend that moratorium an additional 60 days. It hasn't expired in June, but people are anxious, and June for many people is just next month, and the rent bill is going to come due. So we're going to extend that 60 days until August 20th. So no one can be evicted for non-payment of rent, residence or commercial, because of COVID until August 20th. And then we'll see what happens between now and then, right? Nobody can really tell you what the future is. So that will be in place. I hope it gives families a deep breath. Nothing can happen until August 20th, and then we'll figure out between now and August 20th what the situation is. Also at this time, principles matter. And I understand the anxiety, I understand the stress, but let's remember who we are and what we're all about and what principles matter to us. People are talking about we should reopen the economy. It's more important than public health, or public health is more important than the economy. And that's the underlying argument and discussion that you're hearing going on right now. To me, it's never been a question of whether or not we reopen. It's not reopen or not reopen. You have to reopen. You don't have a choice. It's how you reopen. It's how you reopen. And to say, well, we either have to have a strong economy or protect public health, no, that's a false choice. It's not one or the other. It's both. We have to reopen, get the economy running, and we have to protect public health. I mean, this is not a situation where you can go to the American people and say, okay, how many lives are you willing to lose to reopen the economy? We don't want to lose any lives. And you start to hear these, to me, what are absurd arguments. Well, yes, if we reopen, people will die, but people were going to die anyway. Look, we are all going to die at one point. The big question is when and how, right? And the when and how matters. I understand that I'm going to die. I just don't want to die now or next week, and I don't want to die because I contracted the COVID virus unnecessarily, right? So people are going to die. Yes, we're all going to die. That is not a justification in my mind, right? It would be a novel defense. Persons before a judge charged with murder. Did you have a gun? Yes. Did you fire the gun? Yes. Did you shoot the person? Yes. Did the person die? Yes. But the person was going to die anyway. Yeah, I know. But it was the gun that killed the person and the bullet, and you fired the gun, right? So to go down this road, well, there are old people who will die, predominantly on the numbers. By the way, old, how do you define old? Not that old is a justification, but we looked at numbers yesterday, the number of people coming into the new cases coming into hospitals. 51 years old is where the increase starts, right? It's 51 to 60, 60 to 70 is the highest, 71 to 80. But 51 to 60. So 51 is not really old. I know that it's all relative, and since I am beyond that 51, it's easy for me to say, but I don't really see 51 as old when we start talking about the old people. I also think, and I do this for myself, any leader who makes a decision in this situation should be willing to participate in anything they authorize. So there is nothing that we are going to authorize or allow in this state that I myself will not be part of. You know, it's too easy to say, okay, you can go do this, but I'm going to protect myself and I'm going to stay behind the glass wall, you know. No, if all human life has the same value, if I say something is safe for New Yorkers, then I will participate in it, because if it's safe for you, it's safe for me, right? And that should be our standard going forward. And what we've been doing in New York is, look, make the decisions based on facts and data, not emotion and politics. And I understand the emotion, and I understand the anxiety and the stress, and I understand politics a little bit. But that's not the basis for making a decision. And that was, every leader has told us that in different ways. That was John Adams, that was Lincoln, that was FDR, that was Teddy Roosevelt. When my team comes to me and says, oh boy, we had a new prison break, there's a flood coming, there's a hurricane, Ebola virus, and the hair is on fire. Slow down, deep breath. Let's look at the facts. Let's understand the situation, and let's take action based on the facts. That is the way to lead. That's the way I believe to lead one's life. Here we have a lot of information. We have a lot of facts. We know the hospitalization rate. We know the infection rate. We know the number of deaths. We know we're taking antibody tests. We're taking diagnostic tests. We're doing tracing. Make your decisions based on the facts and the data. It sounds simple and basic, but it's more important now than ever before. And it is working for us. It is working. That's not just me saying that because I'm the governor. You look at what's happening in New York and look at what's happening in the rest of the nation. In New York, the number is coming down. And it's coming down dramatically. You take New York out of the rest of the nation's numbers, the rest of the nation is going up, and we're coming down. So what we're doing is working. And when it's working, stay the course. Quote attributed to Winston Churchill, if you're going through hell, keep going. And that's what we're doing. We're going through hell, but what we're doing is working, so we're going to keep going. Because we are New York tough, smart, disciplined, united, and loving. Questions?
Yes, a question about, you began the briefing with the term like high anxiety. And what seems to really increase that is when we think about a second wave later. And you look at people who are concerned, maybe if they're diehard big city people, for the first time in their lives they're thinking, maybe I want to go to the suburbs. This individual family decision. But what do you tell folks like that? Or someone in your own family would be like, I think I'm going to leave the city and try something new. And if that becomes a trend, I'm putting it way out there, but what do you think is your advice, hope, or thoughts on a possible exodus or flight?
Yeah. Look, you're right. High anxiety, emotions are high. Unfortunately, often when emotion is high, logic is low, right? Well, New York had a lot of cases. Yes. And by the way, we now know why New York had a lot of cases. It has nothing to do with New York. First of all, this was a national issue. I'm going to leave New York. Oh, yeah, and go where that didn't have COVID cases? Suburbs? Westchester had them. Long Island had them. Other cities? L.A. had them. Chicago had them. Okay, well, New York had more. Yes, but we know why. It had nothing to do with New York. It had to do with the fact that all the experts missed a very important fact that while we were all watching China and talking about China and doing a China travel ban, the virus had already gotten on a plane in China and went to Europe and had infected people in Europe, and then people from Europe were coming to New York because that's where the flights come. 2 million people came from Europe, February, March, and nobody was stopping European travel. Nobody was screening Europeans coming in through the airports. Nobody said to New Yorkers, by the way, any European traveler, any person from Italy, from the UK, from Germany, they may have the COVID virus. Nobody said anything. So we had 2 million passengers from Europe. Everybody's still talking about China. We do the China travel ban. We're screening people from China. But meanwhile, it came through Europe. Millions of people came from Europe. And we had no idea. We had no idea. That's why the number of cases in New York are so high. They're now looking at people who came from Europe, came into JFK or Newark, but then took a connecting flight and went to another city. And they think the whole East Coast may have seen cases come from Europe. The China flights were going more to the West Coast. But the European flights came to the East Coast. Had nothing to do with New York. Now, once the virus is in New York, any place of density is where this virus takes off. Any place of density. So any place, you look at the meat processing plants now, right? That are in Midwest parts of the country, southern parts of the country. Well, they're a problem. No, it has nothing to do with a meat processing plant. Or we have a hotspot now in an agricultural facility in upstate New York. It has nothing to do with meat or agriculture. It's the density. That's what happened in Westchester here at the New Rochelle, the first hotspot in the United States. What did it have to do with New Rochelle? Nothing. It was the density. It was a person who went to a gathering with 200-300 people. It's the density. So yes, in New York, any dense situation, a meat processing plant, an agriculture plant, city of Chicago, city of New York, once it gets into density, it's going to increase. But why here? Because of the flights from Europe, and nobody knew, and nobody told us, and nobody stopped it. Also, post 9/11, you went through this situation in New York where people asked that question. Well, maybe New York is a target. No, we weren't the only place attacked in 9/11, but it was highly impactful here. We lost a lot of lives. People said, well, maybe New York is a target. Yeah, but that lasted for a very short period of time. And look, New York then came back downtown better than ever before. And we're going to do the same thing here.
You spoke about a couple of initiatives to help struggling out-of-work New Yorkers, including extending rent relief. What is your message to those New Yorkers, and who's hiring in the state?
Well, we get to May 15th. May 15th is when what's called the pause, P-A-U-S-E order, the close down order expires. And then we'll look at different regions in the state by the data to see if they're in a position to start reopening, and we'll start with construction, manufacturing, et cetera. So you will see the economy start to reopen on a regional analysis, and again, not a floodgate, but it will start so we can watch what's happening and calibrate, because we don't want to see those numbers go the other way. But in the interim, look, everyone is just making do, and everyone has hardships, et cetera. We just want to make sure that those people who are most vulnerable are protected, right? And one of the greatest vulnerabilities is I'm not working, I can't pay my rent. I can't pay my rent, I can't feed my family. Okay, we have to make sure that those people are protected. Nobody can be evicted because of non-payment of rent, so let's take that issue off the table. We have to make sure everyone has food to feed their family. We're doing that through a number of ways, subsidy programs, etc. And last resort, these food banks that we're talking about today. But the number one issue that people talk to me about probably is rent and fear about being able to pay their rent. And this just takes that issue off the table until August 20th. Well, what happens on August 20th? You know what? I can't tell you what's going to happen 2-3 months down the road. But I can tell you whatever happens, we will handle it at the time. And that's what we've been doing with this situation all along. Literally in 2-week increments. This is unlike anything we've seen before. So I'm not going to sit here and say I have a crystal ball and I'm going to tell you what's going to happen in a month or 2 months. And anyone who tells you that, I think I would question that person seriously, because there has been no one who has gotten this right from the time it started. Take one more?
Well, I don't want to take too many questions, but about the rent relief and the landlords who would say they've got to pay the mortgage.
I get it. That's a trade-off. Look, none of these decisions are easy. None of these decisions are easy. And you're right. The landlord will say, okay, so now the tenant doesn't pay their rent, but I still have to pay the electric bill. I still have to pay the mortgage. That is true. That is true. And we're working on relief from the banks for the landlords also. And there are programs that the federal government's doing and the state is doing to make sure those banks also get relief so they don't have to do any foreclosures, and we stop the foreclosures on the landlords. But you're right. There is no doubt a trade-off between the tenant and the landlord. We're helping the landlords also. But on a human level, I don't want to see people and their children being evicted at this time through no fault of their own. You know, my grandfather used to say, if you have your health, we can figure out anything else. We can fix anything else. If it's about money, we'll figure it out. But you have to have your health. That's why public health versus the economy. I don't see the trade-off. We have to have our health. We should protect human life. I don't care if a person is old. You know, I'm old by your definition. I still think I have a value, right? My mother's old. You know, she's the most precious person to me. So protect every life. And I'm not going to trade off public health. And we'll figure out the dollars and we'll figure out the economic impact. But we'll protect people in the meantime, and we'll protect their health.
Really quickly, you've spoken about COVID-only overflow facilities that can take positive nursing home patients. Are you aware of any in the Hudson Valley?
We have facilities all across the state that can take any COVID positive person from a nursing home. So any nursing home operator who cannot provide adequate care for anyone in the nursing home, you call the Department of Health. We have beds and care for that person. And no nursing home should keep a person in that nursing home who they cannot provide adequate care, period. They violate their legal obligation and their ethical obligation to the state of New York. If they cannot provide care for any reason, and adequate care, they don't have enough staff, they don't have enough equipment, I don't care what it is. Any reason, that person has to be referred from that facility, and they have to call the Department of Health. And that's their legal obligation. It's not just the right thing to do, it's their legal obligation. Okay, thank you very much. Thank you for letting us be here.
You have been listening to Governor Andrew Cuomo of New York with his daily COVID-19 update. He told us new hospitalizations are essentially flat for the past couple of days, with around 600 people hospitalized with the COVID-19. 231 people died on Wednesday. He said 232 have died the day before. At one point, New York was suffering with over 700 a day. We're waiting for an update from Governor Charlie Baker of Massachusetts. In the meantime, we now join Balance of Power in progress with David Weston, special guest upcoming, Speaker of the House Nancy Pelosi.
But is there some evidence that it's doing that? Are companies hiring back workers now?
Well, the Paycheck Protection Program is really about keeping workers that they have. And when the economy reopens, then we expect those workers to come back and actually perform work. But right now, most of the country remains in shelter in place. And so we're just providing emergency support to businesses and to employees with unemployment insurance so that we can get through this and wait to reopen.
Well, the Main Street program, still not up and running. Is there a chance that that's going to get started too late to be of real help?
Well, the Main Street program, one of the things that with all the Fed's facilities is there have been these what we would call announcement effects, that when we say we're going to have a facility, the markets start to function better. And we're already seeing that across the board in all the areas where there were dislocations. So, no, I don't think it's going to be too late to be effective. I think it's already helping markets do the lending that's so important for American businesses and households.
I don't really want to get into the alphabet business of V's and W's and things like that, but you were kind of negative about the idea of any kind of growth this year. You didn't see a couple weeks ago any kind of expansion until 2021. Is that still your view?
My view is that 2020 as a whole, so let's move out of the quarterly math and just think in annual data, that 2020 as a whole is going to be a negative year, and then we'll start to see positive year in 2021. I think that's about as good as forecasting can get right now, this quarterly forecasting. Forecasting is always a tough business, but it's become very tough right now because it's so dependent on the evolution of the virus and what actions we have to take to constrain it.
Obviously, the markets are seeing things a little bit differently. I'm wondering what you think of that and the idea that just a short while ago, the Fed funds futures market priced in negative interest rates starting in January. I know that's not a policy procedure that you guys are really interested in, but what do you think of the way investors are looking at it?
I think investors are looking at it as, essentially the coronavirus is with us until we get a vaccine or some nice way to control it and, helpful way to control it. And they see that as distant, and then they price that in. And that's what we're all dealing with. But I am an evidence-based optimist, I guess, and the evidence I'm seeing is we came into this coronavirus with a strong economic momentum, one of the strongest economies in our lifetimes, and we're already seeing, businesses are fundamentally entrepreneurial, and we're already seeing them start to think about, okay, how do we re-engage while we live with the coronavirus until we do get a vaccine or some other remediation program. So I have a little bit more optimism there.
Municipal finances kind of in tatters around the country. What are you hearing from cities and states in your district?
Well, cities and states in my district are really in trouble. They're struggling, and they're trying to do the thing that we're all trying to do, which is figure out where can we cut costs when revenues go down. So they're facing tremendous declines in revenues, and then they're figuring out where can we keep essential services and what cuts can we make. So this is just hard, and we're working actively with all of our states and localities to think about what's the best way to make these difficult choices so that we can all get to the other side of the coronavirus and be well positioned to go forward.
That was Mary Daly. She is the San Francisco Fed president, speaking with our colleague Michael McKee. And Michael, I'm delighted to say, is with us now. So, Mike, great interview as usual. So not a V. She does seem to think it will recover based on the fact that companies are eager to get back to work. But are they going to be able to? Didn't we hear from Jim Bullard, her colleague over at St. Louis, saying if we don't get back to work sooner or later, we're going to have a depression?
Yeah, one of the things that Mary Daly went on to say a little bit later in the interview was that confidence is key. People have to believe that they can go out and be safe before they're going to go shopping, before they're going to go to restaurants, and businesses have to believe that they can keep people safe before they reopen. And so that's going to be the big holdup through the summer, is trying to get to that level of confidence that people would be able to resume economic activity. And because of the virus, we just don't know how fast that's going to happen.
And what about that Main Street lending program? You asked her about that. I wasn't sure she directly answered your question whether it might be too late.
Well, she didn't think it's going to be too late, but it's obviously going to take a little while to get out there. This isn't straight programmed to just keep people on the payroll, although that's a component of it. It's essentially to keep businesses alive until they can start rehiring and reopen for business. And I guess her feeling is that money will get out there in time, although the Fed is having trouble getting it started because there are questions about some of the restrictions that Congress put in the legislation.
Any sense of whether they might expand, the Fed might expand beyond where it's gone already in some of its lending programs?
Right now, they're not giving any indication that they're going to, and Mary Daly didn't talk about that, but they certainly have the room to do so because they have more money in the Treasury backstop. We're looking at the PPP program, and so far it hasn't used up all of the second tranche. So there seems to be, they seem to have enough at the moment. If the economy takes another leg down, they could go farther if they need to. And this is all about putting a floor under the economy, of course. When it comes time to try to do some stimulation, she suggested, they're in this range of 0 to 25 basis points now. She suggested they could just go straight to 0, and then they could adopt forward guidance and QE to try to bring down longer rates and give some more stimulus to the economy.
One of the things that struck me, she doesn't want to talk about quarter by quarter, but she said in terms of years, we're going to have a negative number on GDP this year. We'll get a positive number next year. I guess that's encouraging, but not terribly encouraging, Mike.
She's among the more pessimistic on the Fed in terms of how fast we'll start to see growth again. She thinks we could see it into the fourth quarter, a contraction into the fourth quarter. But then in 2021, we'll start to see growth. The problem with Mary Daly has been an economist for many, many years. The problem, she says, is it's just too hard to make a forecast right now. There are too many variables, particularly the course of the virus itself.
That seems fair enough. Okay, thank you so much. That is Michael McKee. He is Chief International Policy and Economics Correspondent for Bloomberg. Great to have you with us, Mike. Coming up next on Balance of Power, we're going to talk with Dick Durbin. He is the Senate Minority Whip. That makes him the second most powerful Democrat in the Senate. That's coming up on Balance of Power on Bloomberg Television and on radio.
Market upheavals.
The narrative is driven by uncertainty about...
Somebody has a stroke every 5 minutes in the UK. With time, though, courage, and the right support, lives can be rebuilt. Mine was. But with this current crisis, I can't imagine how much harder it must be for the stroke survivor and their family, more isolated and alone than ever. The Stroke Association is working tirelessly to support the NHS and develop new ways to rebuild lives. To find out more or to donate, search Stroke Association now.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
When next in Asda, why not try our new mobile Scan and Go app? Simply download the app, scan your shop with your mobile, and pack as you go. Then head to the self-checkout to pay. Quick, easy, and contact-free. So you have more time to get your cook on. Asda. Mobile data charges may apply. Suitable for iOS 9 and Android 5 or above. Selected stores subject to availability.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk. TSB believe in people helping people. So if for whatever reason you become an innocent victim of fraud, they will refund every penny you lost from your TSB account. Find out more about their fraud refund guarantee at tsb.co.uk. Terms and conditions apply.
Want Apple's latest Mac?
From just £34 a month.
With no deposit.
Buy online now from krcs.co.uk. Your local Apple experts, and get your Mac with all this, plus 2 years warranty.
And free next day delivery.
See our full Apple range now at krcs.co.uk. Representative example, cash price 103306, 36 months at 33.97. Total payable 1222.92. Representative 11.9% APR.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time like a game of cards, Pictionary, charades, dominoes, or Never Have I Ever. If you've got the hardware, break out the video game console and enjoy hours of guilt-free gaming. For more indoor inspiration, search Listen From Home on TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is, we've been waiting a long time for this. We actually, in terms of active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one, not only.
Catch these and more MLB podcasts right here on TuneIn.
It's TuneIn Sports on this day. On this day in 1994, the Denver Nuggets become the NBA's first number 8 seed to beat the number 1 seed.
Embraces the ball, and they unlikely upset.
We were just all high-fiving and shaking our fists, and it was, I don't know if I can ever experience anything as powerful as that moment.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Let's pay a tribute to those healthcare workers who risk their lives every single day and show some sacrifice on our own part, too.
There's talk now about the Democrats on both sides of the Capitol Hill working on a new round of support for the U.S. economy. What is essential in that new round when it comes?
Well, there are several things that I think we ought to keep in mind. The early investments we made of $2.7 trillion are unprecedented, but they were really geared toward the economy moving forward starting on July 1st. That's when the unemployment benefits start to end, at least the federal boost. That's when we see an end to the small business loans that are being forgiven. But I think that's an optimistic scenario. Most of us understand that the problems aren't going to end as of July 1st. We'll be lucky if we start to really turn the corner by then. So we can't get weak-kneed at this moment. We've invested in this economy to avoid a depression. We have to continue to do that. I would put additional investment in helping state and local governments through this difficult period. I would certainly do my best to help the healthcare workers with the hazard pay. We definitely need more testing. That is the key to reopening the economy. Those are the starting points.
So at some point we're going to have to pay for all of this. We heard from Larry Fink yesterday at BlackRock saying that he thinks the corporate taxes are going to have to go up. Is he right?
I don't want to get into that conversation at this moment. At this point, we're trying to stabilize the patient, for goodness sakes. Let's not talk about the long-term care issues, and we know that we will have to face them. But if we don't do this right, if we decide to give half a dose of medicine to the American economy, we're going to plunge into a depression which is much more costly than anything that's being envisioned.
So, Senator, the coronavirus and the response to it is not the only thing on the Senate agenda right now. There's also a nomination for the D.C. Circuit of Judge Justin Walker, a district court judge out in Kentucky. Could you please explain what the problem is with this nomination, and frankly, why is it being taken up right now?
Well, you ought to ask Senator McConnell that question. He reconvened the Senate, brought us back with our staff and all of the people that keep this Capitol building running. You would expect that he would focus on the number one issue facing America, this national emergency, this public health crisis. He wanted to focus on a 37-year-old federal judge in Kentucky that he wants to give a promotion to. It's an embarrassment. We should have been here doing the business of the people, which means addressing this great danger and threat to America, not some political favor he owes somebody in Kentucky.
Is the problem with the merits of the nomination? Is it with the overall redoing of the federal courts of appeals across the country, which has been going on for some time now? Or is it just a question of we can't get to it right now, we should come up later with that once we've dealt with the pandemic?
I can answer that question very simply. The vacancy this man is supposed to fill does not occur until September. And we had to come back here at some risk to the health of our staff and people who are working here so that Senator McConnell can keep his promise to this friend of his in Kentucky. The fact of the matter is he wants to fill every vacancy at any cost, and he proved it this week.
Last question, Senator Durbin. In terms of getting the next round of support done, is it important to start with the Senate Republicans so you have some bipartisanship, or can it start on the House side with the Democrats?
It starts with Speaker Pelosi this next round, and she's working on a proposal that we'll see in just a short period of time. I'm not certain when. I've heard a little bit about it. And we're going to sit down, of course, with Mr. Mnuchin, the Treasury Secretary. And I've got to say, I've been told he's a great negotiator and a good person to sit down with. He doesn't give in easily, but he looks for a compromise. That's what we're looking forward to.
Okay. Senator Durbin, I really appreciate your time today. That is Senator Dick Durbin. He is Senate Minority Whip joining us from Capitol Hill. And this is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Not completing high school is more of a social thing than it was an academic thing. Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Whether it's another day of market misery, pandemic emergency, or both, one thing will still go right.
We have the latest world and national news.
Karen Moscow and Nathan Hager bring you the most accurate coverage.
The White House is looking for additional ways to support the economy.
Bloomberg Daybreak.
We continue to watch equities around the world.
Weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. Europe is struggling with the coronavirus every bit as much as the United States, and our colleague Francine Lacqua got to sit down with the ECB president, Madame Christine Lagarde, earlier today.
Central banks, ECB included, are driven by their mandate. They have the privilege of being independent institutions, accountable
This is a special report from Bloomberg Radio. You're listening to Bloomberg Radio. We interrupt balance of power now to bring you the daily update from Charlie Baker, the governor of the Commonwealth of Massachusetts.
Now, over the past several days, this number's been trending down closer to 10 to 20%. So we're obviously going to take a close look at that data. But even with yesterday's data, less than 16% of tests over the past week have been positive, which is lower than at any point in April. And as we said before, our test results in many cases are an indication of where we test and who we test. And we do need to remember that that has a lot to do in some cases with the results. That's why we continue to expand testing, because we believe at the end of the day, the more we test, the more we know. And that's especially true when you test in places where you're particularly concerned about the populations that are involved, which is why we test in hotspots, why we set up a big program with community health centers across the Commonwealth, why we've been testing in healthcare facilities and long-term care facilities. And we continue, as I think everybody knows, to have daily conversations with the healthcare community to carefully monitor hospitalization rates and healthcare capacity. There are currently 3,564 patients that are hospitalized in Massachusetts due to COVID-19. This represents a small increase from the numbers reported on Tuesday, and it continues to be about 5% of the total cases here in Mass that are hospitalized. We're making progress here, but I want to remind everyone that we're still very much in the fight. Another way we're continuing to push back against the virus is to pursue additional personal protective equipment, or PPE. As of yesterday, we've distributed over 9 million pieces of PPE to hospitals, nursing homes, community health centers, cities and towns, and first responders in all corners of the Commonwealth. This includes gloves, gowns, masks, and ventilators. We know that people are obviously anxious to return to some sort of daily routine that made up the way we all lived before COVID-19 and the outbreak associated with that. And we're constantly talking to our healthcare leaders from across Massachusetts to monitor all of this data. The first step associated with reopening, where a limited number of businesses and activities can resume under new conditions, can't begin unless we see sustained downward trends in many of these healthcare indices. As you all know, the health data we're watching includes positive tests, hospitalization rates, ICU capacity, and of course, fatalities. Yesterday's numbers are evidence that despite some signs of trending in the right direction, we still have a lot of work to do when it comes to getting to the point where we feel like we have our hands and our arms around this virus. As we see the curve flatten, we can begin thinking about permitting some businesses to resume operations. And we want to reinforce that by increasing the importance of testing and contact tracing. We've talked a lot about testing. We've talked a little bit about tracing. And we thought it would be important today to talk specifically about how contact tracing works, what we've been up to, what our results are so far, and how we see the future with respect to this. And as we think about reopening the Commonwealth, there are many things we still need to do as part of our daily routines, like wearing a face covering in public when you can't maintain social distancing, washing your hands, and appreciating the hygiene issues associated with disinfecting surfaces frequently. And of course, we have and continue to increase our testing capacity, and we actively support someone when they test positive so that they can isolate and recover. But to bring the fight fully to the virus and get ahead of it, we also need to identify confirmed cases and the people they might have been exposed to, their so-called close contacts. And that's where contact tracing comes in. Contact tracing is a common public health tool that's used for diseases like measles, tuberculosis, Ebola, Zika, and now COVID. And it's usually done by local boards of health or by our State Department of Public Health or by nonprofit organizations in collaborations with governments, especially in developing countries. And for such a contagious disease like COVID-19, tracing is a critical part of how we take the battle to the virus. Last month, we set up the Massachusetts Community Tracing Collaborative. This group is a collaboration with local boards of health, the Department of Public Health, and Partners in Health, which is a nonprofit located here in Massachusetts to contain the spread of the disease. We were the first state in the nation to launch a statewide program in contact tracing, and we're fortunate to have the expertise of Partners in Health on board as we launch. The doctors supporting us have worked on fighting diseases like Ebola, and they've proven their model can work in places with far more challenging circumstances than we see here. We believe this tracing program will be a key element toward not only stopping the spread of COVID-19, but also toward understanding where the virus is, who's it's infected, and where, if we need to invest in hotspotting. If you test positive for COVID-19, you'll be contacted by the Community Tracing Collaborative or your local Board of Health. On that call, we want to be sure that you have what you need to isolate yourself while you recover. That might mean food if you haven't been to the store in a while, or other needs. We'll also ask you who you've been in close contact with for the previous couple of days before you started to have symptoms, or a couple of days before your positive test if you didn't have any symptoms. Then we need those people to pick up the phone. We want them to know why they should stay home, and we want to make sure they also have what they need to isolate and quarantine effectively. If you get a call or a text from your local Board of Health or from the MA COVID team, it's vital that you take that call. Doing so means you're helping your family, your friends, and your community, and the rest of us by reducing the spread of the virus. This call is your chance to fight back against COVID-19. So far, tens of thousands of Massachusetts residents have participated in contact tracing. To date, the Community Tracing Collaborative is connected with nearly 14,000 confirmed cases and reached out to more than 7,500 of their contacts since calls first started on April 12th. The Mass COVID team includes more than 1,600 people making calls. While more staff is anticipated, the team's working at nearly full speed, a remarkable accomplishment in barely a month since we announced this initiative. The median number of contacts reported by each confirmed case remains at about 2. This is a good sign that people are taking social distancing seriously, but that doesn't mean that folks can let up on the social distancing now.
You are listening to Bloomberg Radio. Charlie Baker of the Commonwealth of Massachusetts with his COVID-19 update for today. He's talking about continuing mitigation with sanitizing and distancing, also the importance of testing and contact tracing with emphasis on contact tracing. We now rejoin Balance of Power with David Weston and special guest today, the Speaker of the U.S. House, Nancy Pelosi. This is Bloomberg.
Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, the House of Representatives is back in town, although not quite yet back in session. And the Democrats are really undertaking an effort to have another round of support for the economy in the middle of this coronavirus epidemic. We now are going to talk with a person who's leading the plan to put that together, and that is Speaker of the House, Nancy Pelosi. Madam Speaker, thank you so much for joining us. Appreciate it. We just talked to Dick Durbin, the minority whip, who said that the lead on this really has to be Speaker Pelosi. Why is it so important that this originate with you in the House of Representatives?
Well, the Constitution calls for that. The Constitution says that all appropriations bills must originate in the House. In the bill that the Senate did, they used a House bill to do that, but that was the interim bill. The bill of consequence will begin in the House of Representatives, and it is imminent. We'll be having something soon.
So what is essential from your point of view as you go into this? Because you said you wanted to be bipartisan if possible. What is essential for you to have included in this bill?
Well, let me just say that I'm very proud that our first 4 bills on this subject have been all bipartisan, overwhelmingly bipartisan. As we take up this 5th bill, we're following the path of what was in the other bills. For example, we had state and local in the first CARES bill, CARES 1, and that is what we have in this bill. Honor our heroes. Police and fire, healthcare providers, transit workers, teachers, all of the people who, postal workers, all of the people who make our system work, and in many cases risk their lives to save other people's lives, and now they may lose their job because of the revenue loss as well as coronavirus costs that states and municipalities are suffering. So A. B, if we open up, the key to opening up, to unlocking the lockdown is testing, tracing, treatment. We have to do that. Science requires it. Everyone agrees that we have to. It's a health issue that is going to solve the financial issue as well. And then third, we want to put money in people's pockets. Honor our heroes, state and local. Testing. Let's make sure that we address the disparities and all the rest by identifying really where this cruel virus is creeping out there. It's so scary. And then third, putting money in people's pockets. What do we do? Unemployment insurance, whether we do issues that relate to direct payments and the rest of that. That's what we have to do. Now, we had all three of those in the previous bills. So this is not plowing any new territory. It's digging deeper. It's more money. For example, state and local, it has the support of Republican and Democratic governors throughout the country. Also the municipalities and counties, bipartisan support throughout the country. It's a big ticket because it's a big challenge. It's only for coronavirus that is outlays and revenue loss. Again, as you say, now there's some issues that we just don't, that are philosophical, that we haven't been able to crack, and that is food stamps, the SNAP program. For some reason, that's not something that we can get the other side to agree on. But we have to do it, and the American people know that we have to do that. Brookings Institute just put out a report that moms say that 1 in 4 children do not have any, are food insecure. 1 in 4 children in our country. It's always been a problem, more like 1 in 5, 1 in 6. Now it's exacerbated by all of this. So, again, there's some issues that are traditional debates that we have, but there shouldn't be any question that we would have. Now, food stamps, unemployment insurance, direct payments, so many of these things serve as a stimulus to the economy as well. So but the chairman of the Fed said, think big. Interest rates are so low, think big, and we're taking his guidance on that.
Madam Speaker, you said that for some reason you can't get the Republican side to move on food stamps. Can they get you to move on some of the things that they want, such as payroll tax? That's something President Trump keeps talking about, even capital gains tax. Are you willing to put on the table at least some adjustments in taxation?
Well, let me just say this. If you want to compare the need for us to change the capital gains tax, which once again ignores the fact that there are people in our country that are hungry and that there is some equivalence to that, I respectfully disagree. There are certain things that are urgent. They're urgent. To have a discussion of tax policy, save that for another day and do it in a bipartisan way. But don't draw any lines in the sand. We're not. He shouldn't.
Do you have a sense at this point? I understand the plan isn't put together. You have a sense of how big this might be. How big is this bread box, do we think?
Yeah, big. It'll be big. Well, see, for example, when we went from state and local, that was how we embraced it before. Now it's state and local, separate. And so it practically doubled what we would be doing. And that's a big ticket item. We're doing the testing in a way that has a strategic plan. That's what we asked them to do in the last bill. We had testing in our March 4th bill that passed the House that day. We had testing in the most recent bill. We still do not have what the scientists tell us is necessary to reach out into the communities with a band of people to do the tracing so that we can rid ourselves of this plague. And that costs money. And then the direct payments, that's a big ticket item, and that's what we are working on now. Where do we get the most return for the best help to our people who are desperate? People are desperate. They're heartbroken because of loss of life, threat to life, but so many of their aspirations professionally, business,